Yo, look at T2 fill this daily gap. Ugh. Well, happy Thursday or Friday Eve. I'll keep letting people get in here. I'm just looking at price action right now. What's the volume today? Look at 18 million. My God. 3 hours of trading, only 18 million shares. Let's do the math on that. What is that? 18 million times, I don't know, let's just call it 19 cents. $3.4 million. That's nothing. One trader could literally, like, a trader with a $5 million account has a bigger account than the volume in dollar amount that's been traded in T2 Biosystems today. And we're down 9% on such low volume. This is the stuff that you got to really understand when you're going to, if you're going to be actively investing or trading in the markets, you just got to understand price and volume. That's why, I mean, like, I have kind of like a negative tone, but really I'm not worried at all. I mean, this is just like comical, I would say comically low volume. What was yesterday's volume? 19 million? Wow. The whole day yesterday had 19 million. Okay, so we're coming up on yesterday's volume already traded at noon today. That's interesting. And then the day before was also low at 30 million. So, anyway, let me see what I said that I was all going to discuss in this space call. I believe we were going to go over technicals. Obviously, if you guys have questions, post them below or raise your hand in the chat, and I'll click you so that you can mic up. Let's see here. If there's no questions, we're going to do technical analysis, look at the chart, discuss my thoughts about management silence over the last couple of weeks, and then kind of want to talk about some trading psychology overall. I'm a big fan of Mark Douglas. I don't know if he's still alive. I hope he's still alive. But I read his book. He's got a few books out there, but I read his book, Trading in the Zone. I'm not sure when that was released, but if you're an active investor or trader, I highly suggest you read that, because I would say the majority of actively trading is actually a psychologic game. Obviously, you got to know what you're doing, just from like a fundamental aspect, but a lot of it is managing risk, which really comes down to managing emotion. So that's a good book to read. That's a lot of where my own stuff comes from. I'm regurgitating a lot of his content. So definitely shout out to Mark Douglas. He has a lot of good YouTube videos that he's recorded during his sessions, but they're really long. So hopefully we can just discuss on some of the key aspects there today. But anyway, let's get into the technical analysis. So like we said today, very low volume, 18 million shares traded so far today, which is coming up on yesterday's entire volume. We're down 10% or 8% on the day. I had drawn that flag. It's now broken to the downside on that small flag. And I believe this is probably just, attempting to fill this gap here. Let's see here. There's a gap from September the 28th that closed at 1783. We hit a low today of 1837. That's pretty close. Not all gaps have to completely fill. You can have partial fills. So, I would certainly consider that a partial, if not almost full fill. I wouldn't be surprised if it, bottom ticks that, 1780 range. And then we see a little bit of a bounce, hopefully. Let's see here. The bull flag formation you can see on the daily, you can see on the 4-hour, you can see on the weekly. You can't really see on the monthly. The monthly chart kind of a little bit. The monthly chart shows two inside candles. Um, but I would really, to visualize this bigger bull flag, I would zoom out to the weekly chart, which is that chart that I just posted on my profile. But if we're looking at that, right, you can look at that as a bull flag. You can look at that as a cup and handle, right? You have that nice rounded bottom. It's almost perfectly symmetrical. It's actually really beautiful to look at. That's why I like technical analysis. It's, it's just like pattern recognition and symmetry. I shouldn't say just, but a lot of it is that. And so I really enjoy it for that aspect of it. But anyway, so we have this cup and handle, or if you want to call it a bull flag formation. Either of them are considered bullish formations. And if you saw on my chart, Arca was in here the other day, and I like that he in his video, if you watch his video, he takes like the median of the flag formation and then draws a vertical line kind of measuring and what he's doing there is he's measuring the range of the consolidation. It's not just like a random line, right? It's the range of the price consolidation. So my line in that chart was from that September 18th candle that had a high of 46.85, and then the next, or I'm sorry, this was a weekly candle. The weekly candle of September the 18th had a high of 46.85, and then the next week on September the 25th had a low of 14.93. So that's a fairly large range, pretty much in the middle of that flag formation. So what I did is I just copied and pasted that line and extrapolated it to near the flags don't always break out at the very end of their formation. They can break out kind of towards that third quarter of that flag formation. So that's kind of where I extrapolated it. And it literally, I did not like mess with it so that it went immediately to the $1.08. I just drew that range from, 46.85 down to 14.93, copied that, pasted it, set it on the bullish candle, three-quarters of the way there, and it sat at $1.08. So I suppose I could have moved it like up or down the formation to get it to $1.08, but I didn't purposely do that. Um, so that's just one little aspect that gets us over $1. Technically, is a breakout of that bullish formation, and then the range should continue to the upside, essentially on that breakout, which would get you to that $1.08 range, if we do break out to the upside there. Um, I like looking at technical uh, price targets, and all of this is speculation, right? I'm not a financial advisor. This isn't financial advice, so we're just talking about speculative price targets, looking at a chart technically, and then talking about fundamentals. So I am invested heavily in this, but you do your thing. I don't care what you do. Let's just talk about the charting. So I like to look at confluence areas. So if I see like $1.08 expected range on one technical chart pattern, then what I want to do is follow it up with a different way of measuring some technical moves. So that would be Fibonacci's. And I've posted many times about Fibonacci's. We don't need to get into them too much, but quick refresher, it's just I shouldn't say it's just, but it's a very interesting and deep mathematic, I would say theory equation, and it gets into a lot of different things when it comes into the context of the market. So what you do in order to get a Fibonacci range is you go from a pivot high, and then you go to a pivot low. And all that really is, when you do a pivot high to a pivot low, what you're doing is you're kind of measuring a range of where there was a change in trend in the market. And so if you take that, if you look back in January of this year, wow, I can't believe it was January of this year. We were trading all the way up at $2. But anyway, January of this year, there were 3 weeks, mid-December into early January, that went from $1.08 up to a high of 210.99, and then ever since we hit 210.99 on the weekly chart, we have essentially been in a downtrend until price bottomed out in June at 5 cents, and now we're starting to see a reversal pattern. So we take that pivot high from 210.99 down to the low of 5.4, or 5 cents, and we get a 50 Fibonacci, which is literally, I believe it's just, the 50% mark between the pivot high and low, um, and it's at $1.08. So that's another sign of confluence, that you're now seeing another, um, you know, Fibonacci level that's confluent with your bull flag breakout target. So that's great. Um, I do want to talk a little bit more about these Fibonacci's. So my mentor, Trendy John, I've talked about him several times, but he talks about the 23.6 and the 38.2 being a bearish channel. Now, that doesn't have anything to do with Fibonacci's. By the mathematician did not obviously know anything about candle formation or trading back then. In terms of like stock market trading. So this is what he calls it Fibonology, like his study of Fibonacci. Which is actually kind of a cool term, but what he's done is essentially, applied Fibonacci's to, pivot highs and lows, repetitively, and back tested the method. And what he's seen is that typically, from a pivot high to a pivot low, or from a pivot low to a pivot high, anywhere from that 23.6 and 38.2 range, you're in the same trend as the preceding trend. So what I mean is, if you're in a downtrend from $2.10 down to 5 cents, the retracement to the 23.6 or the 38.2 percentage Fibonacci is essentially, if you don't break above that 38.2, then you're still in a bearish channel. You're still in that bearish trend. Okay. And if it were the same to the upside, like if we were to reverse it from, 5 cents to $2, if price then came back down from $2, we would want it to stay above that 38.2 and 23.6 to confirm that bullish trend. Okay. But what he also says is that it's not necessarily terrible if the 23.6 and 38.2 break. Really, what defines the trend is the 61.8, or the 0.618, that golden Fibonacci. So he says that, from a any you can do this from any time frame, right? But you have to remain consistent. So if we're looking at it from a weekly time frame, from a pivot high of 210 to a pivot low of 5 cents, if we were to not get above the golden Fibonacci, which is currently at $1.32, one could say, based on his Fibonacci or his back testing, that we are still kind of considered in this bearish trend. So I think bulls ultimately would like to see us get above that $1.32 golden Fibonacci from that recent pivot high to pivot low, in order to maybe help out with confirmation of a trend change. And again, this is all just back testing of his method, but the reason why I'm repeating it is because I've obviously seen this evidence itself in the markets in my own experience over the last 3 years. So I wouldn't be repeating it if I didn't think this held some truth. And actually, there's a lot of, if you go on YouTube and get into the rabbit hole of Fibonacci, there's a lot of context and a lot of evidence that Fibonacci has a lot of applicability to active trading or investing in the markets. So we don't need to really go into that too much more further. But anyway, so there's two, essentially technical patterns that coincide with $1.08 price target, which is essentially what bulls need in the very near term and the highest priority in order to avoid this reverse split. So that's why I started with that. If anyone has any questions, let's take a break of me rambling and see if anyone has any questions in this comment section. We only have 2 comments. Okay, yeah, Kai said unusual volume. Yep, I agree. Very unusually low volume. LaFleur, nice to see you, brother. I'll invite you to speak. If you don't want to, you can just reject that. I just know you always like asking some questions. But while he answers that, let's see. Oh, yeah, let's just start before we start talking too much into psychology, which is more general. But let's talk more specific into the silence from management. So um, we've already kind of beaten a dead horse regarding my thoughts um, surrounding management's inaction, not enacting or not executing a reverse split when they have the ability to do so, in the context of their company's share price losing 70% of its value in the last, 2 to 3 trading weeks. So I think that, sometimes silence speaks louder than words, right? Silence is an answer. I always, my instructors in PA school would say that, headed into clinicals, if I say something and the attending just looks at me and doesn't say anything, like that's an answer. um, so silence is an answer. Silence it is a form of communication. Right? Everyone thinks that the lack of communication is no communication, but that's not true. So right now, management's silence, what are they trying to communicate to their shareholder in their silence? Well, maybe they're not trying to communicate anything, right? But I would say, John Spurzl straight up said that he is managing, and the management is actively watching share price. Okay, so we already know that they are seeing their company's stock price, lose 70% value in 2 to 3 weeks, just like we are. Okay. And so we can assume that if John, I would, if we were to put ourselves in his shoes, I would imagine that that would make me feel somewhat fearful in terms of having to, execute a reverse split in the near term. If I wasn't sitting on material information that I thought could get my stock above $1, right? Because he had his chance multiple days to execute that reverse split, and every day that he doesn't, we're getting closer to the deadline, and share prices obviously, not in a current bullish trend. We're in like this downrange consolidation pattern, right? So I would say that his silence tells us that he has the ability, and he's not, so to speak, firing his bazooka, right? Like Hank Paulson back in '08, when he was like testifying in Congress, right? He's like, I need a bazooka. I might not need to use it. Maybe the market just knowing the fact that I have it means that I don't need to use it. Kind of, let me shut this window. Kind of a crappy analogy because ultimately he did have to use it, and I hope that John Spurzl doesn't have to use his bazooka of the reverse split. But anyway, um, so I would say that his silence is actually a bullish indicator for traders, or even long term, more so long term investors and stockholders, um, because it tells us that he's sitting, he sees the share price dropping, and he's not doing anything. Inaction is action, right? Just like non communication is communication, inaction is action. Not doing something is something, right? You're choosing not to act. So I would say, if the fundamentals didn't match up with the technicals, like if I didn't see this nice cup and handle, or this bull flag on the weekly, and we were just like going straight down, and I'm talking like retracing all the way back down to 12 cents, then yeah, I would be, at that point I would be kind of concerned, right? Because then I'm not seeing technicals that are telling me that this is bullish, and we haven't heard from management, right? So, but that's not the case, right? We have like two technical formations that are bullish. um we have a nice Fibonacci price target. We have several gaps to fill on the upside, which gaps in and of themselves don't need to fill themselves. What it is it's unmet liquidity, right? And we know that the market makers love liquidity. And what you're seeing, actually, this is a great hedge, or this is a great, I guess, transition point a little bit, is, talking about liquidity. Well, what are we seeing right now? What does low volume represent, right? That's low liquidity, right? Um, it means that there's not a lot of trading going on, right? There's not a lot of demand. Volume means demand, right? It's either demand from the buy side or demand from the short side, right? But it means that there is interest, right? But when there's no volume, that means that there's very little interest at the current price point. And why would that be? Why would there be very little interest at this price point? Well, I would say that we've exhausted liquidity in this range, right? I mean, we've been trading in this consolidation pattern since, I mean, literally, if I were to go back, when's the last time we traded? The beginning of July. I mean, the first time that we crossed 10 cents was, in the near term was essentially July 6th and 7th. And July 7th, we had a high of 13.4. I mean, we just hit a low of 14.93, just I think what was it last week on the 28th. So, one could argue we've been trading this pattern for 1, 2, 3, like 4 months now. So there's just not a lot of interest in this stock at this price because one could argue that, um, you know, the longs are in, right? Look at the volume. And the shorts, if they had any conviction to the downside, you would see price breaking this technical pattern on volume. But you're not seeing that. You're not seeing shorts, take advantage of price sitting here at 18 cents. Um, when we just hit a low of 14.80 last week, and they know that we have to hit a reverse split, and there's just no volume. Well, why is that, right? Well, it could indicate that there's just not that many shares available to be traded. I doubt that's the case. Well, I actually think that's the case, but the fact that I do believe that there's also synthetics playing here means that I think that there's plenty of shares to be traded, whether they're real or synthetic. But that's just another rabbit hole to get under. So I would say that this low volume indicates low liquidity, and typically when there's low liquidity, it doesn't last long. Market makers aren't making a lot of money when there's low liquidity because there's low volume of shares being traded, which means that they make their money on the bid ask spread, right? And so if the bid ask spread is relatively thin, then you need high volume to make up for that thin margin, right? So that's just not what you're seeing right now. So it's in the market maker's best interest to get to a new price of liquidity. Well, where would be the next price of liquidity be on this chart? Well, it could be to the downside, arguably, down here in this 10-cent range. Um, but the fact that we are in this, let's see here, if you go to the daily chart, we're kind of in this uptrend all the way since June, right? We haven't hit a lower, so we hit, a low of 5 cents mid-June. June 29th hit a low of 6.066. Let's see here. The next low in this would be June 19th or July 19th at 8.3. And then the next low would have been September 28th on, 14.93. So we're seeing higher lows, right? And then we're seeing higher highs, right? We had this impulse from 5 cents to um, a high of 9.25 on 6.15. The next high would have been July 11th at 18.35, followed by the next high on August 3rd, at 45 cents. And then finally, the next high, August 16th of 70 cents. So sorry to go through all those, but I'm really illustrating that we're hitting higher highs, higher lows, and now we're just kind of in this holding pattern, right? So if we weren't in this near term, short term bullish trend, then I would, maybe wonder if we're going to break this consolidation pattern to the downside. But usually these consolidation patterns continue, in the direction of their most recent preceding trend, which is currently up. So I'm tired of hearing my own voice right now. Is there any questions so far that anyone has? Joey, is it correct new employees get shares at 34 cents in the employee incentive package? I'm not sure. That's a good question. Regardless of where they get their shares, I'm pretty sure they're in the negative, whatever the package is. I'm pretty sure they're currently in the negative. So that's just another reason that, employees don't want to see all of their equity in their, I don't know, what are they called, RSUs or stock options, just lose all their value. Um, let's see here. LaFleur, you got anything, man?
Yeah, I saw something about somebody saying that there's an opportunity for an extension on the compliance, like another extension. Is that true or no?
I've seen that floated around. I've seen someone say that um, maybe they can get another 180 days. If that is true, I haven't seen it happen before. I think that this is their third extension. I don't know. I'd have to do the research to see if there's been a fourth extension to a company historically. Um, and even if there has been, I just would like to see like the actual, like writing or evidence that shows that. Obviously, that would be amazing, but I think it's safest for everyone to not to assume that that's just like not the case. Um, but it would be amazing if it was. I think following on the backs of that, we can talk a little bit about. Somebody commented in my post the other day, like government shutdown question mark, and at first I was like, what? What does that have to do with T2? And then I realized I'm like, oh, he's referring to like the government contracts for biothreat, because if the government is shut down, then obviously, HHS and BARDA are probably not showing up to work, which is like crazy to think about, to be honest. But I don't really follow like politics or the general media too much. LaFleur, do you know, like, have we avoided this government shutdown?
I saw somebody say that it was good news as far as like government wise
Yeah,
here.
yeah.
I
I
didn't, I
haven't heard
didn't see
any.
anything.
Yeah, I haven't heard anything bad, and today's Thursday. Um, so I think, and now let's look at share price. It's already back up at 1902, which is nice. So nice little intraday bounce. We'll see if it holds. But yeah, so the government shutdown, if that were to happen, yeah, that would obviously put a kink in the plans, and I don't know if the Nasdaq would work with us in terms of that, because we have no control over government shutdowns. I mean, like, that's just like really unfortunate if that were to occur. You would like to hope that the Nasdaq would work with us in that scenario. I don't know if we need to dive into it too much, but historically, the Nasdaq has been very favorable with T2 Biosystems. Like I said, they've extended 3 times now, as well as the founders of T2 having connections to like the FDA and just kind of the whole network. So luckily, a lot of these penny stocks, they're called shitcos, right? And a lot of them are. But even if some of them aren't, some of them, even if they're great companies and they're just like maybe struggling financially during their research and development stage, some of them don't have the connections that T2 Biosystems has, right? So that's kind of like a little edge that T2 has on some of these other struggling micro caps. But anyway, let's see here. Let's zoom out. Oh, I did want to bring up the 3-day chart as well. Oh yeah, let me put on the TTM squeeze. That could be our third technical that we kind of go over, right? Because the TTM squeeze is that the TTM Pro squeeze is that one that John Carter, I believe, came up with using some sort of mathematical algorithm for in relation to Keltner channels and Bollinger bands. So if we look at the 3-day chart, so the what's what's cool is the higher in the time frame that you go, meaning from 1 minute chart all the way up to like a yearly chart. The higher each time frame goes, these if these squeeze alerts at these higher time frames, it's an even stronger indication that there's volatility that's coming. It doesn't necessarily mean that it's going to break to the upside or downside, just like a new Bollinger Band is neutral, right? Price neutral. It just means that some sort of volatility is going to occur. But that's why you don't ever want to, if you're going to use indicators, you want to look at a lot of different ways. It depends, right? Because then you can get like analysis paralysis because they say different things. But luckily, I choose three that I like: the Fibonacci. I like technical patterns because they reveal psychology. I like Fibonacci's because it tailors to the mathematical aspect of the markets, which are very mathematical with algorithmic trading right now. And then I like the TTM Pro Squeeze because it gives me kind of like this indication of near-term volatility, which I would, otherwise have a difficult time timing up without, that indicator. So there's different levels of the indications of squeezes. There's low, medium, high. I believe black is low, red is medium, and yellow is high. I'd have to double check that. But right now, we've currently on the 3-day chart, meaning every candle represents 3 trading days. We've had one, two, three, four 3-day candles that are firing black on the TTM squeeze. So that would be essentially the longer that these fire consecutively typically means an even larger breakout or volatility is about to occur. Like a big move is about to occur in the stock. So looking at that with the Fibonacci, with the technical patterns, this kind of all comes together, right? Like a bull flag typically does break out, and that coincides with this TTM Pro squeeze, showing me that, you know, within the next, I would say 3 to 4, 3-day candles, which would be, if we have 4 3-day candles, that's 12 trading days, which is just over two trading weeks, right? So that would put us on the calendar to, well, let's look. What's the 3-day candle today? Did it start today? No, it started yesterday. So this 3-day candle closes on Friday, which is kind of cool. I like it when they close on Fridays, just because it's easier to keep track of. And then that means if we were to extrapolate, you know, 12 trading days, that would essentially put us to 5, 10, 20, October 24th, right? Or somewhere in the range of the 20th to the 24th, so that Friday to that Tuesday. And people might feel like really like, oh my God, that's pushing it close, right? Like I said, I don't know when this is going to break out. This could break out like the next minute on news. Who the hell knows? But all this chart is telling me that volatility is about to occur. Usually it means it's going to occur, somewhat in the time frame of these 3-day candles. And if I were to look at the chart in the context of everything, in this falling, consolidating flag formation, that time frame like literally coincides with the end of that flag formation almost, right? So, and I guess a flag formation could indefinitely go on if you were to just extend those lines because they're almost parallel, so they would go on for infinity almost until they converge. But you understand my point essentially, that there's multiple indications that there's going to be a short-term breakout. If I were to, kind of use math using these 3-day candles, I would put it within the next, 1 to 2 trading weeks, if not just above that, 2 trading weeks. And yeah, I mean, is that close to the? I mean, what would they have to be compliant by November 20th? I think 10 trading days would be. Let's just get exact about this. November 20th is a Monday. 5 trading days before would be that November the 13th. 10, I think, would be November the 6th. Right. So even if they were to get above $1 by, October 24th, that still gives them pretty much 2 trading weeks um, to stay above $1. Also, this is where we're really speculating. Like, I just know this management is clever. Like, people sleep on this management because the stock price has been so terrible. Um, but if you look at like how they time things and how they, release news and in context to share price, they're very clever. They're very savvy when it comes to how their news affects price action in the market. So I would say that John is probably he's aware. I saw a comment earlier that John's not he's underestimating shorts and hedge funds. Like, dude, his stock is down 99.99% almost. Like, this dude doesn't, like, he's very aware of hedge funds and shorts. Okay, he literally addressed the fact that like big pharma doesn't want him to succeed. Like, he alluded to that during his last shareholder call, I believe, which is amazing. Like, that's the first time I've heard him straight up just call it out how it is. Like, yo, we have something here that others are going to be damaged by, right? Like, there are forces that don't want us to succeed here. So he's very aware of this, and so I imagine that he's trying to time this up so that there's not a ton of time for shorts to attack it to the downside, but also giving it enough time to remain compliant, right? Because he doesn't know exactly what share price is going to do. If we look at that technical trading pattern, right, that $1.32 would be a great range to get to because it gives us a little bit more buffer, right? That 30 cents is a lot more percentage range than the $1.08, right? So it would be great if we can get to that range. Um, but that's just the technical, aspect. And John doesn't know. I highly doubt John, charts his own stock. That would be cool. I wonder if CEOs do that. That'd be kind of interesting. If John's like charting this at home, looking like we got to get to the golden fib, baby. I doubt it. That's just entertainment. But yeah. So we can talk a little bit more about psychology because I think we've talked a lot about the technicals. We don't need to go down to a day. Let's see what the highest, before we talk about psychology, let's talk about, oh, so even on the weekly chart, there's now been two firings of it appears, I think it's the low squeeze. Um, and the weekly chart is just brutal, man. What is that? 1, 2, 3, 4, 5, 6, 7 weeks of just straight, like, red candles. That's brutal. Obviously this week hasn't closed yet. If I were to be like a betting man, I would think that this weekly candle closes within the body of the previous candle. um what did T2 just tweet? Join us at ID week. God, their PR on Twitter is so weak. They're just always like, join us on these. It's actually really good if you do join them because they talk about their studies and stuff, but it's just like been 3 years of that. So, what was I saying? So yeah, I think this previous weekly candle closed at, let's see, it opened at 24.62 and then closed at 22. So that's like a really narrow body, right? That range of the body would be 22 to 24.62. So if I were a betting man, just based on this formation, I could definitely see, potentially a turnaround in price heading into Friday so that this candle closes, potentially green and with a little bit of like a bullish hammer, and inside the body of this weekly candle, in this 22 to 24 range, right? That's just kind of how I'm seeing this play out. If it doesn't play out that way, it won't concern me whatsoever. That's just me kind of speculating on how I'm looking at this pattern. Just kind of, I like inside and up formations, inside and down. I look for those all the time in the market, because they do present themselves a lot. So anyway, yeah, weekly, there's some low squeeze there, which is even better on the 4 day. Let's go to the 4 day. I can't even see. No, I didn't see any squeeze on there. That's interesting. And see on the month, nothing there yet either. When the monthly starts firing, that'll be insane. Um, but but yeah, so. Let's talk about some psychology, right? Because I've seen, or actually, before we get there, yeah, let's take some questions. What's up, LaFleur?
Yeah, I mean, I was just about to kind of segue into psychology a little bit.
Yeah,
As far as kind of you touching on maybe we've exhausted liquidity at this price
yeah,
level,
yeah, yeah,
kind of touch on that a little bit more and then what will kind of introduce new liquidity for the market because I've seen kind of like some instances like this morning at like 8:35
yep,
I felt like a 1.3 million volume and price didn't move at all. So
yep.
I'm trying to see like what kind of is the market sentiment right now, and are people still buying into at this price?
Yeah, for sure. No, I think that that's a really good thing that I think I left that on, like, where do I think the liquidity go? Could it go to 10 cents? And then I never talked about it going to the upside. So thanks for bringing me back. Um, yeah, let's talk about liquidity. Um, I would say no. I don't think there's a lot of, I think that there's obviously some buyers, right? Otherwise, price would be dropping through the floor. But there's just not a lot of buyers. There's not a lot of sellers. There's not a lot of anything. This volume is just so low. Like I said, this is, less than 4 million or less than $5 million of, literal dollars being traded today. That's just so small in the scheme of the whole market, right? That's tiny, 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 tiny. So what would introduce new liquidity to the market? Well, that's what everyone's waiting on is news. News, right? Like that's what my trading mentor Trendy John would always say is news is nothing more than a catalyst to get price from, demand to supply or supply to demand, right? Everyone always is like, this is I wish that he was in here talking with us right now because he would be a great just person to bounce around, and discuss this with, but let's try it anyway. So, shout out to Trendy John for this concept. I learned a lot of this from him. But essentially, news drives liquidity, right? So if you see so many people get this is where retail is going to learn a lot. Okay, so have you ever noticed that you have like Nvidia, let's just take Nvidia for example, right? Huge like uptrend, like through the moon, rocket ship, right? And then good earnings will come out after that huge move, and then share price will drop. And you're like, and retail's like, what the fuck, why isn't this still going up? Like, this is really good earnings. But the problem is the news functioned in that scenario. Price was at supply, right? Liquidity was probably drying up. You were probably seeing lower volume at the all-time highs. So what does that tell? So then the news drops, right? And then the price drops to where there's higher liquidity. Well, where's that going to be? Well, if you're at supply and then news drops and price goes into demand, well, you got to look for that next demand level, right? And so typically then you'll see that like a head and shoulder formation, right? Like you see this huge run up, this kind of flat pattern, prices, volumes kind of dripping, liquidity's drying off, and then news comes out. And then if you're sitting at supply, which it was, or, if you are, then it drops down to demand. But it can go the other way, right? And let's talk, that's where T2 is right now. So we're sitting in this area of demand. And how do we know that? Well, price isn't falling below this consolidation pattern. That means that there's enough demand to prop up the price in this range. Okay. But we're just consolidating. We're just trading in this range, essentially from 14 cents up to 70 cents for months now. How do we get out of this range? Right? I mean, we could technically break out of this, candle, this whatever formation, and go test the top of this range up at 34, but we're still in this range. Look great. Price would essentially go, 60, 70% in a week or two, but like we're still in this range. So how do we get out of this range, right? This liquidity trap. Well, we need news, and we need news that overwhelms the market to the point where it brings in new volume. And if you look at the weekly chart, let's pull that up again. The biggest volume that T2 had was the weeks of July 31st, August 7th, and August 14th, when it had a volume of 1.18 billion, 840 million, and 1.13 billion. The next highest volume week was a singular week on September the 18th, which was T2 biothreat FDA clearance news, when we had 784 million volume. Okay. So we haven't even tested that 3 week, literal 3 billion share volume since, July going into early August, right? 2 months ago. So what does that tell you? Like, so we have huge volume followed by, kind of this low volume. Now what we should see is another period of huge volume. And I'm talking like another 3 weeks of billion to 800 million volume is what I'm anticipating. Because that would be, if that's what drove price, if that's what was needed to get price from 8 cents up to 70 cents, 3 billion volume, then that I would why would I assume differently that the share structure hasn't really changed since the bottom, right? Like they introduced all that dilution and we bottomed out. So if we know that the price has the price movement, if we just study the price action, going from essentially 8 cents to 70 cents with 3 billion volume, and the share structure hasn't changed since then we can assume that we're going to need similar volume to the upside in demand and buy volume to get to that, next liquidity level, or that range, that breakout range, which would be, that $1.08 to $1.32, which is what I was anticipating. And those are just Fibonacci's, but if we look at the chart, we need to look at the chart too, not just the Fibonacci's, right? Let's look at the chart pattern from $1.32 to $1.08. Well, there's definitely some choppy price action in that range dating back to, early to mid December of last year. So there's definitely whenever there's some choppy price action or flat price action in a range, that means that there was some sort of demand, right, at that level. So if that was previous demand, right, then that tells us that that's now new resistance, okay, because we're under that demand level. So previous demand turns into supply, just like previous supply, turns into demand. So I would say that right now, if you have that previous demand level at $1.08, kind of going up to $2.10, that would be the next liquidity level that price would trade at. Now, unfortunately, it's kind of hard to determine. It's hard to determine the volume. It's hard to compare the volume back then because the share structure of the company was much different, right? If you looked at, I think there's a nice website. I need to bookmark it, but there's a nice, I think it's dilution tracker or something like that, that gives a nice visualization of companies' dilution history. And T2's like chart goes parabolic. It's like kind of on the steady uptrend 2020 to 2022, and then 2023 it just takes this like parabolic move to the upside because we were diluted many millions of shares. So we're past that. We're past that huge dilution phase, and now we're drying up liquidity, and we need new liquidity, and the liquidity is going to come from news. What is the news going to be? Well, I can assume a couple different things. I think the news could come from primarily, and this is my guess, contract news for the T2 biothreat panel that was just approved by the FDA or cleared. Um, but I believe they're also, working on this T2 resistance panel, getting that submitted to the FDA for that 510 clearance or 510K clearance, right? So um, that 510K submission could also serve as the next near-term price catalyst. I don't necessarily think that T2 resistance 510K submission would come before the government contracts. Um, maybe in the scenario of a government shutdown that happens, but again, that just wouldn't be good overall. Um, but yeah, so those are the two catalysts that I think would get price essentially broken to the upside for that new liquidity. When that news occurs, that's the guess, right? That's where you can use technical formations. That's when you can use like TTM Pro Squeeze to kind of gauge, like, where are we? How many of these have fired off? How many days has it been since this thing is fired off? Historically, when this is fired off, how many days or weeks did it take, right? And we can look at that. I mean, if we look at the 3 day, let's look in the past. When was the last 3 day squeeze? Oh, I love this. This is the last 2 day firing on the 3 day chart for the TTM Pro was February 2nd, February 7th. And right after February 2nd and the 7th, we went from $1.40 and capitulated all the way down to 50 cents. Right. So that was just on 2 firings, and now we're sitting on 4 firings of this 3 day squeeze. Right. So could see an explosive move. Did we cover liquidity there? Did I cover liquidity there? I think you had some more questions in there that I might not have answered in the flare. Let's see here. Yeah, Bay Area was talking about a conference. Thomas Powers, aren't you assuming we shoot to $1 in 1 day on the 24th? Why would I assume that? I don't know. Wouldn't it be more realistic to start uptrend, say, next week? No, I don't think this is going to be like, I mean, who knows? Like, this thing could come out with contract news, and then we can gap up that day and then be above $1. It could be a 1 day thing. or it could be, news is released, it gets us to 83 cents on that 38.2 fib resistance, and then we continue going from there. Like, I really don't know how price action is going to respond to the news. Um, we can just speculate, but it really doesn't matter if it's in a day or two, or just as long as it's before the deadline, we're Gucci. Um, Joey, less than 45 days. Deadline for government shutdown. Okay, so that's before our reverse split anyway, I'm pretty sure. Or after our reverse split deadline anyway. Joey said a 45-day extension for the NASDAQ that's been floated around. Oh, R. Cali. Go to paragraph IM 58.2. Okay, so I'll have to look at that. I won't do that live on the call just for everyone's time. Um, but it looks like R. Cali had posted some of that news regarding that. Maybe there could be another extension. Who knows? But I'll have to read about that. Yeah, so that's liquidity. I think that's very important to understand that whenever there's very, very low volume, that liquidity is drying up. Something has to happen for price to get to another level of supply and demand. So in this case, if we're sitting at a demand level and if news acts as a catalyst, then just like in that NVIDIA example, I said news act to get price from supply to demand. Well, in this case, it can act to get price from demand to supply. And I think that next supply area is up in those targets that I previously mentioned. So let's talk about Mark Douglas and trading in the zone and some trading psychology, because um, I think it's really important. I do follow stock twits occasionally. I've been less active, less actively posting and less actively following, what's being posted there, just because emotions are high. There's a ton of just random accounts posting bearish stuff and trolling people. Um, it's so weird, that happens. But whenever there's money involved, people have incentive to make profit. So if they're short, obviously they're going to post things that breed fear and uncertainty. Just like someone to the long side is biased to post only to put their blinders on and ignore bearish sentiment. But our job is to filter through that noise and find the objective reality, right? So what have we seen over the last couple of weeks? I wouldn't even, like, fear is one thing. I think you've mostly seen uncertainty, you know, and it's not just T2. It's many micro caps along the board. I just reposted Hodor, that account. By the way, he just made 200% today because he was in a call option position on a biotech that got bought out. I think that guy is involved in more buyouts than it's insanity how many buyouts that guy. He's like posting what feels like every other week. He's like, "Oh, 100% on this option, buyout." I'm like, what the hell? Like, I don't have the time or the energy to scroll through and read every single different biotech. But anyway, that Hodor account is really great to follow. You can go look at, his post today, but he just posted this long post that I, essentially quoted, that I thought was just spot on. And XBI is the biotech index, right? Just like the SPY is the broad market S&P 500 index. Um, XBI has been, I mean, let's just pull it up. I think it's been pretty brutal. Yeah, I mean, my God, since 2021, this thing has been in a steady downtrend. That's insane. I think we could talk about that even more. And not that T2 Biosystems is involved in the XBI, because I don't think it is. Maybe it is. I don't know. I really don't know the holdings of XBI, but I know that it's biotech. And I mean, let's pull this thing up on a quarterly chart. Okay, interesting. That's really interesting. So on a quarterly chart, XBI is just kind of been trading flat since 2015. Which is really interesting because if anyone's heard, I actually just posted this today. The lost decade occurred in the it's a term, I'm sure it applies to many things in the world, but in context of the market, the phrase "the lost decade" refers to 1999 to 2009, where essentially, if you bought at the top in 2000 or in 1999, all the way to 2009, you would have experienced essentially negative to flat returns, which is insane to think about in the context of like your life, your working life, right? You work for, I mean, essentially since you're like 25, you retire ideally at what, 65. That's what, 40 years, 10. That's like a quarter of your investment career, life essentially just flat to negative, which is insane. But with XBI trading in this flat pattern since 2015, with kind of a blow off top in 2021. I mean, maybe a head and shoulders back down to 43, like maybe, but ultimately with this flat pattern since 2015 and biotech's kind of being weak across the board, I can definitely see, right? There's cycles in the market, right? So what we've seen is like QQQ is a good example. Sorry to be a bit tangential, but we'll all wrap it up. Like if we pull up the QQQ quarterly, this thing's just been straight up since 2003. Well, really 2008. So not even anywhere close to what the trading pattern of XBI is. So what does that tell you, right? Like QQQ is a technology index, right? So it has core holdings in your major blue chip tech stocks and growth companies, and then obviously some smaller growth companies, right? Um, but that trade, like if we were to think of it from a trade from 2008 till essentially 2022, is exhausted to the upside, right? So if you want to get like heavy in Apple right now, or like Microsoft or Amazon, or like, they're good long-term holds, like I'm sure, but in terms of like your growth potential on those is like really exhausted. I mean, we just had two decades almost, 15 years of just straight up. But then if you look at other, so where do investors go? Where does smart money, where do mutual funds go to for return, right? They got to somewhere. So this is the idea of what am I trying to say? Industry, or essentially rotation in the markets, right? From tech to blue chip to dividend to value to maybe biotech, right? All these things are happening like on the go. And it's hard to see them in real time. But if you look at them from a big picture, like I'm right now, this is very revealing to me, that XBI is trading flat. It tells me that there could be some breakout here, to the next 1 to 2 years, maybe some near term downside, but within the 1 to 2 year period, like I would be long XBI probably, and look at their core holdings and look at their stocks and see, what technical trading pattern they've been in. But the reason why I bring it up is because T2 is a biotech, right? So it has the potential to get into this index, I imagine, if it becomes a big enough market capitalization. And that would be another freaking. Remember when Tesla was added to the S&P 500? Holy shit, that thing went bonkers. I think it went up 100% after having previously gone up like 500%. Um. So anyway, I droned on a little bit about XBI, unintendedly, but unintentionally. But I think it's actually a good little thing to look at there. Because it could correlate, right? Like people, we were talking about, does T2 correlate with the S&P 500? And I mean, Arca brought that up. I get what he was saying. I have a hard time seeing that. Like, why would T2 Biosystems correlate with the S&P 500? I actually think that it has a negative beta or a low beta, which is objectively like a low correlation to the S&P. I'm pretty sure, but I would definitely see this having like a higher correlation with something like the XBI. Like, I think it would be cool to, I mean, if we look at the XBI from 2021 to current, I mean, it's been shorted from 174 down to, a low of 61. T2 has done very similar things since 2021. So, maybe some correlation there. But anyway, so let's talk about LaFleur. Do you have anything before we move on a little bit?
No, I don't have anything. I know
Okay.
we're pretty much waiting on news, so interested to see kind of how price moves intermediately during that time now.
Yeah, man, we're just in a holding pattern, and it sucks because this is where humans struggle the most in holding patterns. I tell my patients this, like, I did addiction medicine, which has high overlap with psychology, and I've been doing that for the past 2 years, and recently just changed my job to urgent care to get into something a little bit lighter in anticipation to maybe cutting down some work with T2 as well. But um the last 2 years, as I've been like talking to my patients and evaluating them and seeing drug addiction, which does correlate to gambling, by the way, addictive behavior, um, depression, anxiety, all these things. Humans do not do well when they are spinning, when they are in this holding pattern, when they're in this like purgatory, right? And that's what that's what a technical flag formation, that's the flag, that is literally what that represents psychologically. It's buyers not knowing if we're right. The buyers can't break out to the upside, the sellers can't break out to the downside, so we're just fucking chopping around. We're in purgatory. We're in stock purgatory. And humans today have the shortest attention spans in history, right? We don't even need to talk about all the reasons why. Like, it's very evident, social media and everything, right? So we're able to look at our stocks all day long, and the more that we have that accessibility, there's great things that come with that. There's downsides, and the downsides are that on your days off, you're prone to just looking at it. And then you're prone to just like getting, and I do this, I get on social media and then I get worked up and I get angry about people who have no fucking clue. And I'm responding to like people with 4 followers, like, what am I doing? You know what I'm saying? I'm like, that's weak. That's human weakness. That's just me, essentially lashing out my own anger, my own impatience, at someone else, when really there's we're just in this holding pattern, like bears aren't winning, bulls aren't winning. We just gotta wait, okay? And this is where Mark Douglas really kind of he talks a lot about, one of the most important things if you're going to be a successful trader. And when I say trader, I just mean actively managing your investments. It could be day trading, swing trading, you know, buying T2 now and then selling it 5 years from now. You're just actively managing it, right? Um, he talks about essentially you have to come to terms with this concept of uncertainty. Okay, and how do you come to terms with uncertainty, right? Most people don't, and that's why it evidences itself in as fear in humans, right? They don't deal with uncertainty well, so emotions like anger and fear start presenting themselves. But how do we deal with uncertainty from like a healthy aspect psychologically? Well, what we can do is we can just manage risk, okay? And if this is kind of where it pertains more to, he does talk a little bit more tailored towards day traders and swing traders more, but it's this idea of, and it doesn't mean in this context, it doesn't even mean having a stop loss. It could mean just investing an amount of money that you are okay with losing, okay? And that number is different for everyone. And like I said, I'm not trying to tell people to buy or sell. I'm just discussing market psychology, trading psychology. If you essentially, if you were to, let's say you make $50,000, let's say you make $50,000 a year, okay? And you have like a car payment and maybe a rent payment or a mortgage, somehow, I don't know how, but maybe you did. And you have all these things, but you have some discretional income at the end of the day. Maybe you have $200 left over at the end of the month to blow away on anything. Let's say you take that 200 and you invest it in a T2 and it goes to 0. Are you going to be perturbed by that? Like, are you going to, like, lose sleep over that or bring it up in conversation with your friends or family? No, right? Because you essentially manage that uncertainty, you manage that risk by investing or trading or gambling an amount that you are comfortable with losing. And everybody's comfort level and risk tolerance or capacity is different. And usually it's dictated by their income. Okay. This is why doctors, surgeons, lawyers, attorneys, and Rye, I'm going to invite you to speak, man. Oh no, did you leave? Oh, I hope you didn't get upset. But anyway, this is why these like high income professions, a lot of them actually trade because they can whip around like crazy, what would be considered crazy amounts of money to most people that they can make you back by picking up a few shifts or an emergency surgery that some of these trauma surgeons make 20K overnight. You know what I'm saying? So everybody has different risk capacity, risk tolerance, but the idea is if you're sitting in this right now nervous, and it's okay to have fear and uncertainty and nervousness to some degree. That's natural. But I'm talking about if it's leading you to actively like, scroll through social media and look for me to be posting things like, oh, when's the price is dropping 10% today, did Taylor post? Like, why isn't Taylor posting? Um, you know, oh man, what's going on? If this is your mindset, that means that you have too much into this. Something is your risk tolerance is exceeded, right? Because you wouldn't be acting that way from a psychological perspective, from a behavioral perspective, if you weren't overly concerned about losing that money. And if you're overly concerned about losing that money, that means it's too much. Okay. This is like very, very important. So, people look at how much I have in this and might think that that's a lot, but you got to understand that, like, I've been working as a PA for 7 years now. I'm relatively young, but it's a high paying job. I have higher risk tolerance than a lot of people, and that's not a flex. That's not a brag. That's just the truth. And, and so, don't feel bad if you don't have anywhere close to my shares, right? Like, we have completely different lives. Don't feel small in this. I just don't want people like. I'm seeing a ton of fear. I'm seeing a lot of like anger out there, and it tells me that people are losing money, and it tells me that people are likely losing money that they like probably don't have to lose. Right? We already talked about credit card debt being at all-time highs. Everybody knows about inflation and the cost of living being absolutely absurd right now. Wage growth has not kept up with inflation. Like, people's discretionary incomes are at all-time lows. So everybody's coming at me like this thing's gonna reverse split. You're a fucking idiot. Like blah 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 blah. And it's because they're losing money on these other penny stocks that they're gambling, which have gone through reverse splits. And now they're projecting their fear onto me or onto anyone else. Why do people project fear? Because it makes them feel better, right? It, they don't have to bottle that up and just sit with it, right? They get to like put it on someone else. Here, you go fucking deal with this fear, right? I'm giving this to you. Right? This is not good. Right? This is like adults do this, but it's quite childish behavior, right? It's manipulative behavior. So the way that you get around that is, I mean, you got to be in the context of the markets, you have to set yourself up to where you're in a steady state in your mind. And that's just essentially, size and risk allocation. Okay, so we don't need to really talk about that too much. I think that's what we're seeing right now is just people are probably trading with way too much money that they shouldn't be messing around with. In hopes of making up for their low wages, increased I'm not saying that they're not like the intentions are strong, you know. So like I get it. People need extra money, but this isn't the way to do it, you know. What's up, LaFleur?
Hey, I know you're talking about managing your risk, but
Yeah.
can you speak on kind of like managing your position? Because I know you guys kind of talked on a little about it, kind of like on the last call, like when it peaked at 70, could you have kind of like exited a little bit,
Yes,
bought back in at X price, and then bought back in at, so we can just
absolutely.
talk to that because I feel like I kind of screwed myself over a little bit and I could have had a better average than I do now. I
For
mean, I've
sure.
kind of bounced back over these last couple weeks, but yeah, just want to kind of get your thoughts on that.
Definitely. Um, I You can definitely maximize profit and your position on this by swing trading. And LaFleur is essentially asking like how you do that. Not should you do that, right? Like how do you do that? If you choose to do that, then how do you actually manage your position? And that's like a really good question. I don't have a concise answer for that, but we can definitely talk about like how we could get there. So one way is essentially to keep a stop loss, right? And I know that we talked about um, not having stop losses on investments, but what you can do is not have a stop loss for your entire position, right? You can have a stop loss for a certain percentage size of your position that you're comfortable if and this goes hand in hand with losing money, right? The concept of losing money and losing out on money are the same. It's pain for humans. It results in the same emotion. Okay, that's FOMO, right? And fear. So it's greed and fear. So, um, talking about this, what you can do is because I said this myself, right? What would be the most painful scenario for me is if I were to exit at 70, thinking I can buy back in at 60, 50, 40, 30, 20, whatever. And then the next day, this thing just fucking releases news and it gaps up or it's bought out, God forbid, for whatever the fuck, right? And I have no way of getting back in. That would be the most painful scenario for me. So how do I manage that pain? How do I manage that uncertainty? Is essentially what LaFleur is asking. And what you can do is you can ask yourself, you can come up with a share size, a percentage number that feels good, or a dollar amount of risk that you think that you'll lose out on that you can tolerate. And what you can do is whatever that number is, keep a stop loss on that. And I wouldn't necessarily put like an arbitrary percentage loss on it. I mean, you could. I typically preferred technical stop losses when I was trading. Um, for options, technical stop losses don't really work too much because of theta decay, and that's why I kind of sucked at that. But if I had a higher account and was just trading equity and shares, you can absolutely keep technical stops. Like if I were to keep, this is a great example, right? So um, I previously had that support line, that bottom support line, ranging from August 8th low of 22.25, extending horizontally. So what you could have done is, and I thought that that was, essentially going to be the trading ranges 2250. We were going to be in a tighter consolidation pattern, and then we were going to break out. But that wasn't the case, right? What did we do? We broke below that 22 literally on the 25th of September, and since then, right, have dropped tremendously down all the way to 1493. So what could you have done to prevent losing all of those, gains? Essentially is you could have kept a stop loss and on a percentage of your shares if price broke below that technical level of 22, right? It's not some arbitrary percentage loss that just doesn't feel good for you. That's a way to get chopped up in the market is by putting arbitrary percentage losses that just are like, I don't want to lose $50, which is like 20% of my account. So I'm just going to put 20% stop loss. I mean, I guess that's managing the risk in your account, but in terms of managing the actual, price action, I think that you're much better off managing it from a technical aspect. And that would be like if it breaks support or resistance levels, right? So I think that that's the best way to essentially manage around a core position and accumulate shares. If I was more, I don't like the fact. So I hold the biggest amount of my shares on Robinhood, and I think Robinhood does have like a trailing stop loss order, which I think is percentage based. So then you could just put like a limit stop loss at like a technical level if you wanted to. Um, I don't feel comfortable putting those orders in. Um, like it's really weird. I like have been trading with Robinhood for so long now that I've kind of seen some shady shit happen, right, with Robinhood. So, uh, I'm prone to just, like I've put in like limit orders that didn't get filled before, and just a bunch of stuff that has gone wrong. So I just really don't, that's why I don't actively manage around a core position, is because my execution on Robinhood is just, I just don't trust it enough. When I was day trading every day, I was actively trading and executing positions on Thinkorswim. It was much faster fills. Robinhood's fills are fucking terrible. They're notoriously terrible. And it's because that's the reason for that is because so people are like, "Oh, it's free to trade Robinhood." Well, no, you just get shitty fills and the slippage is your fee. Like that's the fee to trade Robinhood, is your shitty fills, right? When you put an order to buy at 550 and you get it at 555, right? This is like this is the pay to play that is hidden in Robinhood. So that's why I personally just won't put stop loss orders on Robinhood. Um, but if you are using a different brokerage in your oh, let's invite Max up here. I saw you. If you're using a different brokerage and you're good at executing, then you can certainly do that, and you can take technical stop losses. I really like support and resistance levels rather than like a flag formation that just breaks to the downside, because you just might not have enough data to be drawing that trend line well enough, right? You just might need that extra down wick candle. And then if you don't have that data, then you just got fucked, and then that's when you get really mad, right? Is when you like draw that downtrend line from the flag, it breaks price, you stop out, and then it all of a sudden reverses, like 2 days later, and you're like, oh shit, I just needed to stay in for a couple more days, and that was the pivot low. So in that case, how would you avoid that on this? My flag might not even be right, but I think it is because it's got two really strong wicks that it's now bounced off of. But I could be wrong, and if I was keeping a technical stop loss on this, I would probably put it below this inside and up formation on the daily on August 2nd. And I would probably put it below this inside candle, which has a low of 1426. So that's, if I were to be actively managing my position and stuff like that, that's kind of where I would put it, but I'm not. Um, but we certainly can do that, like hopefully right now I think the fear in me of missing out exceeds my ability to actively trade around the position, because I'm currently red on the position, right? Like my share price average is 24 on Robinhood and 68 on Fidelity, so I'm currently negative. But even at 70, I was like really green, but not to the point where I felt justified for how long I didn't feel that my value had been, I didn't feel the value was where I wanted it to be. And so essentially, I didn't actively manage around that position. And what I'm trying to get at is, let's speculate, if T2 were to have this V-shaped formation, right? And go up to $10, right, within the next 4 to 5 quarters, like we were talking about. I'd be sitting on tremendous amount of capital gains, tremendous amount of actual equity that's unrealized. Like at that point, I think I would feel very comfortable trimming my position, because I would feel like I'm profitable enough to where if this drops 50%, or even, if I shave off, 25, 50% of my position at $10 and then it goes to 20, like, I won't feel as bad as if I shaved off 25% of my position at a dollar and it went to $10, right? So you just have to get to that, and for me, unfortunately, rather than a percentage gain, that's when you like, because in life, like, dollar amounts matter, right? So like, at $10, like, I'll be completely. Everyone knows I have 450,000 shares sitting just in Robinhood. I have 13,000 in my Fidelity that I will not touch, but um the Robinhood shares, if share price goes to $10, right? Like, I'm sitting on 4.5 $1 million of like unrealized gains at that point, and not a flex, but like, what I mean by that is, at that point, I think it would almost be irresponsible for me to not shave off a little bit of risk. I've gotten enough of those gains. If I shaved off 50% of my position at that point, I would collect, before taxes, to, a significant amount of money, and then I wouldn't feel as bad as if price then were to take off without me. Like, I made my bag to where I can have a comfortable life. For other people that aren't sitting in that position, let's talk about that, because I realize that not everyone's going to be able to retire at $10. Everyone has a different position. But what you can do is you can tailor that to your scenario, right? You can look at that dollar, because, like I said, I want to be an investor in this long term. Like, I intend to hold this, right? Like, I don't want to exit my position, but that doesn't mean I'm not going to be trimming along the way, right? At levels that I see fit. So how do you manage around that? Like, let's expand into the future, right? So if you have a smaller position, and to you don't want to, $5,000 doesn't mean anything to you, but $50,000 means a lot to you, right? What you can do is, if 50,000, whatever the number is, you can take off at a little bit of risk at a number that feels like, your shareholder value, your equity has been returned to you, right? I've been in this for 3 years. My equity has gone down 99%. Like, I need a lot of return in this to feel like I've been given value back, right? Like, I will not, even though I have a price average of 24 at $2.40, I'm going to feel better and good and happier, but I'm still not going to be like sitting where thinking that that's where that's where we need to be. And I know that that's kind of more subjective, right? Because everyone feels different about the stock, and there's not a lot of objectivity of how you measure, like, well, how do you know when you feel good about something? So I understand that, but stock trading isn't all about objectivity, right? Like, you got to go with your own finances, a dollar amount that materially changes your life. If you're not taking off risk at that point, that's like the people with Dogecoin, right? Who became millionaires, and then, like, it came all the way back down because, let's face it, Dogecoin is not like a solid fundamental investment. Like, can you imagine that pain? You know what I'm saying? Like, you sat on $1 million of unrealized gains and then didn't sell because of greed, and then, or shave off 50% of risk because of greed, and now we're back to, where we started. Like, absolutely, I don't want that to happen to me. So everyone's going to have their different level. I think, to be more objective, I love Fibonacci extensions. And I think that trading around Fibonacci's is probably the best way to manage a technical position. Like, if you can get a pivot high to a pivot low on a 1 minute chart, if you're intraday trading, a 5 minute chart, a 10 minute chart, or if you're swing trading like an hourly to 2 to 4 hour, or if you're, really swinging for months, you zoom out to a daily, weekly, monthly chart. What you want to do is you want to find your pivot high to pivot low, or your pivot low to pivot high, whatever that near term trend is. And then you want to just find the Fibonacci's, and you can do some research on this, and set your stop losses, at the technical Fibonacci level. So let's do, 5 cents. This is We probably just should have started with this 5 cents, um, or 0.054 pivot low to a pivot high of 70 cents on the daily chart, right? So let me edit this to get, oh, mother of God. Of course. Sorry. I messed up. All right, so let's try this again. And let me edit the levels. We're at 0.54 and then we're at 0.70. All right, so what are our fibs at this? So we have the 50 fib, right? Pivot low to pivot high. The 50 fib is sitting at 37.7, and the golden fib is sitting at 30.08. So LaFleur, if I, if we could roll back in time, I would have probably put a technical stop loss on my trade as soon as we. This is if you were trendy John, he would have put a technical stop loss at the 38.2 fib, which is at 45 cents. But I would have probably kept that, if we broke the 61.8. But the problem is, I mean, like let's even say you did that. Let's say you put a stop loss, after we got to 70 at the 50% fib retracement, and it was at 37.7. Well, price did keep going down all the way to 24, right? So I guess you could have bought in back then. But the problem is like, how do you know when to buy back in, right? I mean, I guess you at that point you just gotta wait to see what's worth your tax event, right? I mean, you got to pay 30. I mean, depending on your tax bracket, let's just say 25% on your capital gains in the near term, right? If not 30%. So I don't know. Yeah, you can do the math on that, but I would use Fibonacci's to trade around if you want to. Let's see here, but let's talk about the fib extensions real quick. So from that pivot high to pivot low, 210.9 to 5 cents. The fib extension, the 161.8 extension that I mentioned, is sitting at $3.38. The 261.8% extension is sitting at $5.43, and then the 423.6 fib extension is sitting at $8.76. So, just historically, I have seen these extensions like work a lot of times. I'm not saying it's going to work this time, but it all depends on where you draw your pivot high to pivot low as well. And it can change those values. So if you have a really good pivot high to pivot low and you think you nailed it, then those values can be very close. And if you just look at the chart, I mean, those values definitely coincide with areas of previous demand and gap fills. So I can absolutely see, an extension to the upside going from, 3 to 8 over how long a period of time, I'm not sure, but on the quarterly chart for that V reversal to play out, right, it can go from a range of 11 to $29 over 4 to 5 quarters. Um, so, this could be just a slow churn. And if that does happen, if this is a slow churn, why would that be? I think it would coincide with probably the storybook of the earnings, the EPS. Alrighty. We've been going a while now. Let's see if we've missed any comments so far.
Hey, did you have any thoughts on the option calls for
Mm.
50 cents for the I think it's November
Calls or puts?
calls, of course.
Yeah, I mean, let's look at the open interest on those. 5,700. That's a lot. That's a lot of open interest. 9,000 open interest on the October 50 cent. Jeez. Um,
But what's crazy is they're the same premium though, as
yeah,
far as October 20th and November 17th. So there's no difference, and the delta is no difference either.
you got it. It's because, yeah, exactly. They you can't get, so it's funny, they're listed as the same premium, and most people would think, if you so what's interesting is they are both trading at the same premium, because if you go to the last trade, it'll tell you what the premium was bought at. Sometimes though, just because the bid and the ask is 0 and then 5, if and I've had this before, I put in like a limit order for 5 cents and then I'll get filled at like 3 cents. Like I've literally gotten I've filled 100 contracts before at like a cent, which means like a dollar. So I've like spent $100, got 100 contracts, and I don't even remember if they went worthless or not. But usually those are like super gambles because it's like they're so cheap. The premium is like pretty much gone. You'd have to have an explosive move to gain anything back. But yeah, no, you're right. They're both trading at $5 a contract, which it shows it says 5 cents on the option chain. It's $5, right? Because you're controlling 100 shares per contract. Um, the open interest is absolutely insane in relation to how, I mean, we're sitting at 18 cents. 50 cents is, more than it's 200% above where we're sitting right now. And you have a huge amount of open interest with decent amount of premium. Like the implied volatility is above 200%. The implied volatility is at 300% on the Octobers. Actually, historically, so this goes into, Arco was asking me like, how come you don't make a market on this? And what he meant was essentially that I can act as a market maker on T2 because of the number of shares that I own. If you own 100 shares, you can sell one covered call. And you can't really make a market with that because that's not very much liquidity. But I have the ability to sell 4,500 covered calls, based on my share count, which is the entire open interest on one of these, options chains. Like I literally could have been the market maker for October's, 50-cent option chain, and you could have been all buying those from me. Now, you didn't because I'll pull up my Robinhood and there's no covered call option open. I didn't sell to open anything. And nor would I because I would be selling at historically low premiums. Like the implied volatility on these on the options chains is actually it's high in context to a lot of different stocks, like 200, 300% implied volatility is very, very high, generally. And it's because the reason why it's so high is because the strikes, the dollar strikes, are so far away from the underlying that it would be a miracle for those to go in the money, outside the context of fundamentals. And that's why if people are buying them, you're selling a high amount of volatility, right? Like you're if you're selling an option that's 200, 400, 500%, 1,000% out of the money, like you're selling a shit ton of volatility there, right? Now, what's interesting is that in the context of T2 biosystems, 200, 300% option volatility is actually relatively low, relatively low. If you were to go back to when we were trading, from 14, from 10 all the way to 70 cents, in those couple of weeks, the volatility on those options chains, I watched it. It went up to 15, 1,300%. 15, 1,300%. So those $5 contracts were trading at 30 bid, 35 ask, right? 7 times what they're trading now. Now, I'm a fucking idiot and I should have sold premium at that point because I literally could have sold the February 2.5s or the November 2.5s for like $30 per contract. Like let's say I just sold 2,000 of those contracts, right? That's $60,000 of premium that I could have just collected, sat on, and then if price went above 250, well, here's your shares. Here's your 200,000 shares. Thanks for the locked in profit and the premium, right? This is the beauty of a covered call. This is the beauty of owning equity. It gives you options, right? Literally. So the options chain is a great thing to talk about. If you plan on being in this long term, that's an option that's something that you should explore and learn about as a way for you to collect passive income, right? It also helps you kind of manage your risk a little bit, right? Like that's a good way for LaFleur for yourself to manage risk if you want to learn about that and do it yourself. I don't know how many shares you own, but what you could have done is instead of, and as a matter of fact, this is probably what I'll do is instead of trimming shares at prices, is I'll probably just sell covered calls at unbelievable implied volatility. Because what I could have done, this is the beauty of covered calls. Are you guys ready for this? This is going to blow your fucking mind. This is why selling volatility and selling options is like the name of the game. That's why, like, market, like most people who make money in options are selling options, not buying options. Okay. So I could have sold the February or the November $2.50 strikes, 2,000, 4,000. The liquidity was there on the November or on the February 2.5s. There's 27,000 contracts open interest. Okay. That's like 5 times what I could have sold. Okay. So the liquidity was there. I could have sold, um, let's just say half to, let's just say 200, or, a little less than half, 200 contracts at $30 a share, or $30 a contract for $60,000 profit. Okay. Well, that's great. But what if price goes to $5? Well, then I lose out on $2.50 a share on 200,000 shares. Well, that's a relatively big upside that I missed out on. Right. But what about this scenario? Price goes to, what it currently is right now. It went from 70 back down to 14. The premium in the option chain I sold at 30 dollars per contract is now trading back at $5 a contract, or maybe $10 a contract, which means what I can do is I could take that $60,000 that I made in passive premium sold, and then I can cover that short, essentially that short position on my covered call, right? Because I sold to open the contract at 30. Now what I could do is I can buy back to close the contract at 5 or 10, and then I can keep the difference. So that is one way that you can make profit while holding equity and not touching your equity, by just trading the premium on covered calls. You can do this with cash secured puts as well. So that LaFleur, I'm glad you brought that up, because honestly, man, that would be, and I'm glad that I thought about it again. Like, that's, on the next news release, what I'll look to do is, depending on price action, like if we're sitting at, and I'm going to be completely honest with you guys. That way, you guys know. I don't want to be like sell. I don't want you guys to be like my exit liquidity on options. That's not what I want at all. What I want you to be aware of is the premium. Like, first of all, I don't even think you should be touching options on a penny stock. Like, the strikes are way too illiquid. They're way too far away. The bid asks are fucking terrible. Like, don't touch the options on this. And that's coming from someone who can collect premium from you. So I'm being as transparent and fucking like devil's advocate as you can be here. Okay. So what I'm saying is, for me, what I would like to do and manage my position is on this next biothreat news, not on the initial day of the news, but I'll wait a couple of days for that premium to bake up to get to that highest point that I think. And then I'll start to sell premium at an option price that I feel comfortable giving shares away. Right. And that might be the $2.50, that might be the $5, that might be the $7.50 strike. I don't know what's going to be liquid and what's going to be selling what premium. But I'll look at the implied volatilities and the strike prices and the expirations. And what I'll try and do is I'll try and sell the most near term expiry at the highest volatility. Okay. And I will just try and collect that premium. And if it goes above and I have to exercise, or if someone exercises and I have to deliver, then whatever strike price I sold at, I was happy with delivering and getting exercised, right? If I have to exercise at 7.5 and price goes to 10, hey, I'm okay. You know what I'm saying? I didn't sell my whole position at that. So, here's 100,000 shares at whatever price. So, and the likelihood and the, all right, like I think 90% or more options are not, exercised. So this is just, a way to manage the position. This is talking about the options chain. Um, I think that the high amount of the high amount of open interest on the October .5 strike is absolute fire for shorts right now because we know that share price has to get above a dollar. And so so a lot, like I said, a lot of let's say price goes to 50 cent, or let's say price goes to 60 cents, and you own the uh 50 cent contract, like you bought to open it, right? And so technically you could, at 60 cents you could essentially exercise that contract and say, hey, I want my 100 shares at 50 cents, right? um I paid my premium already to own this option. Now I want to own it at this price, and then you would have to essentially, in order to own that, you would pay, $100 times 50 cents. So, um, you would pay $50 to own 100 shares at 50 cents. But you would automatically be sitting on capital gains because you would own it at a cost basis of 50 cents while the stock was trading at a premium of 60, right? And you think, "Oh, well that's amazing." Well, you got to remember is you paid premium, right? So you have to offset that capital gains with however much premium you paid. Now, this plays a role into whether or not options are exercised or not. That's why I'm talking about this. So if price is just sitting at 60 cents and you paid $10 a contract, right? That means that your capital gains are not, I mean, you probably made some money on the premium, but like in terms of capital gains on the share price, if you exercise at, you know, you're holding it at 50 and it's at 60, you're not really sitting on huge baked in gains. But let's say price is at $1.08 and you're holding those 50-cent strikes. Well, now you're sitting on 100% gain equity just on your option contract, right? And maybe at most you paid $5 to $10 a contract to own that strike, right? So your premium, offset still puts you at a huge equity position, right? So at this point, you're actually kind of, incentivized to exercise those options because they're deep in the money, and then you can control covered calls on those contracts in the long term, right? Because if you don't exercise, then your options are going to expire at some point, right? Now, most people, what they do is instead of exercising because they don't have the capital to exercise, is what they do is, if you bought the 50-cent strike at $5 premium, right, then your break even with the intrinsic value would be 55 cents, right? Because it would be 5 cents added to the 50 cents. But your intrinsic value, if the stock was sitting at $1.08, would be $1.08 minus 50 cents, right? Which is um, 58 cents, right? So what you could do is if you bought, the option at $5, now you have $58 of intrinsic value, and I doubt the liquidity is going to be strong on those because people don't really trade, deep in the money options too much. But essentially, you would make, almost 10x on your on just the premium flip. So that's perfectly fine. But what I'm saying is the shorts are kind of playing with water, and when I say shorts, I mean anyone um, who sold a call at the 50-cent strike, and I'm mostly talking about a naked call, right? Because like covered calls, they're not playing with fire. You have the shares to deliver. If they get exercised, it's no big deal. But if you sell a naked call at 50 cents and then it gets exercised and you don't have the shares, right? Um, that becomes a problem, right? And also, if there's a bunch of um, or if there's a bunch of deep in the money options that are going to be exercised, well, that's a lot of buying pressure of the underlying equity, right? Because if you don't have the shares, then you have to go to the open market and you have to buy them at the open market in order to then deliver those shares. Okay, and this is kind of like what sets up a short squeeze. Actually, it's not a. This is like more of a gamma squeeze. Okay, and a gamma squeeze is just the closer the underlying share price gets to a strike price of an option. Essentially, the more buying that the underlying market maker has to do of the equity in order to hedge that trade, and that increased buying pressure can continue to squeeze the stock because go, especially if the strikes are wide, right? This is kind of the nice part of having a wide strike price is that like, you know, if it goes from 50, then the next strike price is $1. So it's like these can kind of create like these exponential squeezes per se.
Hey, what are your thoughts on the kind of like I've seen this kind of floating around as far as the cost to borrow against the stock and kind of like the implications behind that and how much of a factor that really is for us.
Yeah, dude. I don't even know how shorts are making money on this stock right now. I mean, the cost to borrow, the fees that I should hop off this. And I was gonna do this the other day because I'm just seeing stuff. I was just gonna call TDA and just be like, "Yo, I'm looking to short T2. What's the cost to borrow? How many shorts you got?" I don't know if they'd give me the number of shares they had available, but they would certainly give me the cost to borrow and I can confirm it with what's being like floated around. But I've been seeing like 30-40%, cost to borrow. And the essentially the cost to borrow a short stock, the cost to borrow a stock with the intention to sell it short to the market, that fee or that percentage fee increases essentially with volatility and when the inventory is low. Right? This is just natural supply and demand, right? So if a broker has shares, has a shit ton of shares available, like in the case with Apple, the cost to borrow on Apple is going to be tremendously low, right? Because there's a huge amount of supply of shares, and the volatility of Apple is relatively low. But T2, a stock that's gone 1,000% in 3 months, back down 70%, is like fucking extremely volatile, right? That's the number one reason to have a high short percentage fee right there, cost to borrow fee, and then add that to the fact that what we think is they have probably a low amount of inventory of shares based on the amount of recent institutional interest and retail interest, right? That the CEO straight up mentioned. We believe that we have reason to believe that retail holds a tremendous position in our common stock or something, is what he said. So whenever the cost to borrow is higher, what does that do to someone in a short position? Well, I don't even know why you would short something if it had such a high cost to borrow fee in the first place. I mean, like, what's the likelihood a stock's going to drop, 30 or 40%? I mean, that's a big move to the downside, right? But with a penny stock that was trading at 5 cents that went up to 70 cents and is still at 20 cents, shorts look at that and they're like, oh, yeah, this thing's got maybe another 70% in it that it can go. So let's go ahead and, take our chances, play with fire. I think this is a shit code. They have a reverse split coming up. So let's fucking take our chances. So what does that mean that they have to do when the stock just drops 20 or 30%? Well, they didn't really make a whole lot of money, right? They haven't even covered their cost to borrow fees. So they got to wait. They have to wait. They got to wait. They got to wait. They got to wait until price, hopefully, drops to an extent where they can cover their cost to borrow fees and make some money after taxes, right? So it kind of is a bear trap, right? To have a high cost to borrow. Um, and it disincentivizes shorting, right? This is actually kind of like a brokerage, maybe, acting somewhat responsibly, kind of like, hey, because if they were just giving away shares to short for free, I mean, geez, they would invite all sorts of trouble, right? But if they're like, hey, the volatility on the stock's really fucking high, like, you know, sure, if you want to short it, go ahead, but you're gonna have to pay us 40%. Them knowing that you're probably not gonna take that deal. you know, and good luck if you do. That's why I've just like, yeah, it's hard enough to make money in the market, and then you have to cover a cost to cover fee, or I mean, a cost to borrow fee. Like, geez, shorting seems like it would be just tremendously anxiety provoking. But a lot of people make money on it because we know that that's what hedge funds do. And if hedge funds do it, then shorts, retail shorts can essentially piggyback off of that, right? And typically and maybe this is just like anecdotal, but it just like it feels like whenever there's I don't know. Just it feels like it's easier to catch a move to the downside than it is to the upside for me. Like I've never shorted a stock, but just look, I can see the attractiveness because I'm just like, bear flags really just have been, like head and shoulder formations. Like these formations really do play out quite well, you know. Um, but I won't ever do it because of that cost to borrow fee on any stock. Um, but anyway, I shouldn't say never. I mean, I don't know what I'll do 10 years from now. Maybe I'll turn into, what's that saying, right? You're a hero so long you turn into the villain. Um, so yeah, that's my thoughts on the high cost to borrow fees that we're seeing floated around. Ultimately, what does that do for the longs here? It just adds fire, right? Or fuel to the fire. Because if shorts are not realizing enough gains to cover their cost to borrow fees, then they are just sitting there, which means that every day goes by where another short enters their position, the short interest is likely growing and growing. And obviously, we know what a growing short interest does to a stock in high demand. Uh, so there's just like I hate to use that term like the stars are aligning here, but that's just like really what it feels like when we are talking about the storyline, the timeline of the pipeline. When we're talking about debt restructuring timeline, when we're talking about government contract timeline, FDA clearance of some of these products, 510(k) submission, pair it with technical analysis, like really there's just a lot of congruence among all of these different aspects just pointing to not just upside but truly what I believe and what the CEO said their goal is to get above $1 organically, right? So I just am not engaging in that fear right now. This is the most comfortable I've ever been in this stock, which is insane. That is really insane. I'm less than, you know, I don't even know, right? What is it? October 6th, right? So a month from now, we need to be above $1 essentially. And I'm just sitting here chilling. Like truly, you would feel it in my voice if I was. The reason why I got emotional on the other call when we were talking about the reverse split the other day wasn't just thinking about the reverse split. It was discussing it with Jim, and I just and Jim, if you're listening on replay, like I love you, man. I just yeah, the reason for the emotionality there is just because I wasn't seeing the logic in his argument there, in terms of like why hasn't management executed a reverse split after seeing their stock price drop 70%. That just doesn't, there's no way that you can tiptoe around that and make that rational, right? So that's where I really got emotional, is because I said it multiple times actually quite calmly and I think rationally, but then like we were just still, and I'm and everyone's got their their breaking point, and I am emotional about this. I've been through a reverse split already, and if I got reverse split again, and then diluted, I would see a huge equity loss. So yeah, absolutely, it would be fucking weird and robotic if I was purely unemotional about this. But right now, sitting here just talking to you guys, just every day that goes by, I'm getting comments. Oh, we're a day closer. I'm like, thanks for reminding me how time works. Yes, I understand that every day that we go by is a day closer to the timeline. And I'm not worried. The silence from management has been my communication to just relax. Just relax. So we got Raj here. I'm going to invite you up here. I know Max has been listening. I'm going to invite you back up here. I apologize for ranting. I do love that you guys stay here and engage. Makes it worthwhile for everybody, not just me. And like I said, I really am not here for clout. I'm not here for monetization. After, if I'll always be around, but if T2 goes to $10, like, um, yeah, I mean, at that point, it's just like, hopefully I don't have to be holding calls and stuff, but, um, like I'm here to, I wish somebody was doing this for me 3 years ago because I would have saved a shit ton of money and a shit ton. I've cried over this stock. Like I've spent times. I'll never forget. This is probably like too much information. Okay, Joe. Joe Dykman is. I don't know if that's his like actual last name, but um, he I call him Chili Dog Joe, but he's been kind of like trading this for 3 years with me on StockTwits, and I have his phone number, and we chit chat every once in a while. He's a good guy. He likes to troll a lot, so people don't like him, but I find it actually kind of funny because I've been here long enough. But and I know he's not malintended with it, mostly just to evict a response. But anyway, he essentially, oh man, what was my point of talking about Joe? My God, I just went on a tangent and I completely forgot. I think what I was saying was that essentially, um, you know, over the last 3 years, there has been so much, misinformation, calling out this thing's gonna rocket, and I didn't know better. There were pumpers on this stock, 3 years ago, right? And I didn't know any better. But you can always kind of gauge somebody's intentions based on just their previous behaviors. And like I don't have a subscribe on my thing. I don't have a leave a tip here. um so I just I hope people can take my information, with some objectivity, and not think that I'm pumping, because I just want people to essentially have the ability to understand what's going on in this, because I know people are struggling right now just financially, and people are interested in the stock. And so if I have the knowledge and I have the time, I kind of feel it's like my duty to tell people about this, right? It's not like this is just like a piece of shit company that I'm going to make money on. Like this thing can save lives. So it benefits the company to have shareholders, and to grow, and share price appreciation, and it's like a win-win for everybody. um Max or Raj, did you have anything? LaFleur, I think you let me invite you back up here real quick. Who do we got in here so far? Sorry, I forgot what I was going to say about Joe. Sometimes I just have a little mini stroke. I don't know. I'm going to pull up the comment section and scroll through here. Earnings estimated for November 8th. Oh, wow. That's interesting. Yeah, I almost wish earnings were sooner, right? Because, I mean, if that debt pay down is reflected on the earnings, then this thing is going to, I'm pretty sure, show some positivity in its earnings. I don't, I could be wrong, um, but yeah. So let's keep scrolling. Let's see here. More detail how Robert Langer plays a role here. I don't think he plays like an active role here. I just think his connections are very good for the growth of this stock and for the compliance of this stock ultimately. And I don't know like what everything Robert Langer has been involved in, but it's been a lot. And certainly I'd imagine some things that he's been involved with have failed. So I don't know what his track record is, but I know it's very good. Um, and so I would say just his notoriety and his connections within, the pharmacology and the academia is probably just an overall, just another bullish fundamental aspect of the stock. I don't think it's going to play any active role though. I don't think you're going to hear his name or anything. Probably more so behind the scenes stuff.
Any thoughts on the hirings that we're seeing and the job postings?
Yeah, the hirings and the job postings. Oh my God, I just had a flashback to what I was saying, how I had cried on the stock. I wish that you guys were probably sitting there like, you were talking about this. Yeah, we'll talk about the hirings, but first of all, Joe, I was talking with Joe one day, and it was months ago this year, earlier this year. I was still in Colorado. The T2 BioThreat 510K submission came out, or actually, no, not the 510K submission. It was just the clinical trial results, and it was just after I had bought like 75,000 shares or 50,000 shares. Like I, after the reverse split dilution all the way down to like $1.08, $1.30, $1.50, I thought, oh, okay, I think I'm pretty safe here to buy in. So I had like a share price, 130s, 150s, and then price. I was literally showering, and I was like looking on my phone, scrolling through whatever, and I see this notification like T2 is up like 50% in after hours. And I'm like, what the fuck? And I'm like, like scrolling, trying to open up Robinhood, and I see the news, and literally, like, it takes me 5 minutes to open up my app, read through the news, get a sense of what's going on. And not 5 minutes later did T2 release a fucking offering where the price had closed that day, I think at $1.40, went to $2 and maybe 10 cents in after hours, and then closed in after hours like $1.28 or something like that. That I cried. Like, not sobbed, but I was like fucking. That was like a very low point for me, because I thought that we were like done with, I got through the reverse split. I saw that shit, and then I got shorted from $5 down to $1 post split. And I'm like, you know what? I'm gonna go heavy here at $1.30, or at $1.50 even. And then we'll recover back to $5 and I'll be good. Nope. Drop down to $1.28. Nope. Drop down to 50 cents, or down to 80 cents. Nope. Drop down to 50 cents. Nope. Bleed it to 20. Nope. Bottom out at 5 cents. I mean, you don't understand the fucking fear and uncertainty that I've already gone through with this thing. Okay. Like, most people have been here for 3 months, right? In the good, when this thing is bottomed out at 5 and gone to 70 and now consolidated down to 20, and they feel like hard done by because, they're down 70% on their position. Can you imagine sitting through a reverse split and then getting shorted down to 5 cents? I mean, literally, I was when I specifically remember, and sorry to tell stories, but it's kind of fun. I remember, I went to France this summer for my buddy's wedding, and we we were staying in like the countryside in this like castle, and we didn't have a lot to eat because they didn't prepare very well. But for that part, sorry, John, if you're listening to this, the rest of it was great. But we had to go to we had to go to McDonald's, to get some food. And I just remember like sitting in McDonald's, and I think price was sitting at like 5 or 7 cents or somewhere around that. And I just looked at my girlfriend, and I just was like, who I've been with for 3 years. So she knows, T2. God bless her, she's probably been my rock through this to keep me sane. But, I looked at her, I'm just like, what did I get wrong? Like, the technology of this company is superior to anything on the market. The only reason it's not in hospitals right now is because it doesn't have the ability to detect all of the organisms that cultures can. But their next generation platform has the ability, right? Like, and I wouldn't have been so confident in their ability to do so if it wasn't just a matter of them extending the application of their platform. It's not like they have to like get like clinical trials on a completely new drug, and go through all that. Like, no, this is literally just an extension of their already FDA cleared T2DX platform to just add organisms. And people are like, well, why didn't they already have it? Because it takes time and money to to get hundreds of pathogens detectable on breakthrough mini magnetic resonance technology. Like, we we kind of like, take for granted the amount of science that's going on in this company. This is fucking breakthrough technology. This is like new technology that humans have never seen before, right? That they're playing with over the last like half decade. So this shit takes time. This takes money. And so I'm sitting there in McDonald's and I'm looking at it and I'm like, do I buy more? Do I buy more? Like I'm sitting here trying to talk myself out of like this investment. Like I lost, I got it wrong. And she's just looking at me like, why don't you buy more? I'm like, are you serious? She's like, yeah. If you truly believe, I'm like, I can't, I'm like a rational person. I'm a logical person. At that point, I was willing to see like where I had been wrong. And I certainly had been wrong on the timeline of the company and the finances of the company. But in terms of the fundamentals of the technology, you know, and the fact that I knew that CRG couldn't own the lien on the technology unless they defaulted on their loan until next year, like those two things gave me the confidence to be like, you know what, fuck it, bag me. You know what I'm saying? Like YOLO, like truly YOLO. Like, and it takes faith, right? So, um, but even with me buying 300,000 shares at like 7 cents, I'm still at an average. I bought 300,000 shares or more at 7 cents, and I am still at an average of 24 cents and red, despite realizing 300 to 1,000% gains on those. I'm still in the negative. That's how fucking much this thing has been shorted. Okay. And, I might be getting tangential and getting in story mode here, but I think it's important to give people context of like where we are within the relative history of the stock, and not just like the relative price history, but the relative equity of other shareholders. Like it's not just me. I'm just hyper vocal on Twitter because that's how I choose to be right now. I know that there's other people out there with bigger sizes than me and with higher averages than me that have been here longer, and I just don't know them, right? So it's important to understand the history of the stock if you're trying to get a picture of, you know, I just saw a video on YouTube. Why is T2 from this guy? Why is T2 a bad investment? And he's describing all these things, the dilution, the reverse split history, the 50% drop in revenue over the last year. Dude, thank you. Thank you for literally explaining why this thing has already been shorted 99%. Can we move on? Right? The market's forward looking. So whenever you see all this doom and gloom and all the history, just tell people, thanks for telling me what I already know. Unless they're telling you some news that you didn't understand, it's just like, dude, you're describing what is priced in. Like it takes a lot for a stock to drop 99%, 99.99. So, anyway, let's see here. Every time I just keep looking through the comments because I feel bad when I miss comments and then hop off. We'll see our group become majority shareholder after their preferred shares are converted. If a reverse split happens, yes, that would be the case. I don't think it's going to happen, but yeah, they would. Um, T Camp, I've known you for what, month now? I also learned from you. Short time's insane. Oh yeah, awesome. Good to know that you're getting some value. R. Callie, I appreciate the kind words, my man, or woman. I'm not sure the sex of that hedgehog in that profile picture. Let's see here. Joseph, might be wrong if CR Group never sold all their shares when we had approval news. We'd be over 50 cents now with all the hype and volume. I mean, Joseph, yeah, if CR Group didn't sell their common shares, would we be over 50 cents? Impossible to know. Butterfly effect, man. Would we have liked CRG to keep those common shares and hold it with the retail crew? Absolutely. but that's just not the way of a creditor when they have a business to operate, and when they are extending a loan to a company that's financially strapped, like, right, that's a huge risk for them. Like, black swans exist, right? Black swans exist. There's a less than 0.01% chance that there's accounting fraud in this company like Enron that nobody's picked up, and this thing could still go to zero, right? This is the worst case scenario. But in that case, CRG would be wiped out, right? They would go into bankruptcy, and they would have to right. They were owed $50 million, now down to 40, but that's a lot of money to just lose, if something were to happen fraudulently. So what do they need to do to manage that risk? Well, you make fucking $10 million on trading the common stock when it 10x's. You know, that seems like a pretty reasonable way to manage the risk. So now they have, 40 million left over to them, and they have like, a quarter of the debt that they recuperated, or I should say the credit that they recuperated, and or I should say a fifth, not a quarter. And they also gained, a significant position in their preferred shares, right? So they did not sell out of this company. They have a massive position in their preferred shares that are convertible, right? So they have an equity position now, and they also were able to pay down some of the or recoup some of that credit that they extended to T2. So they've overall reduced their risk in this company, right? Which is essentially what we're talking about. We're talking about managing risk. Why can't CR Group manage risk? Like, I don't get it. People are so like fucking hypercritical of CR Group selling their common shares. We're sitting here talking about managing risk. Like, it's hypocritical to say they can't sell, but we can. And it's one thing to say, well, it gives retail confidence. It's like, that's not their job. Their job isn't to handhold you. Okay? Their job is to make money, and then lend money, and then make money on that lend money. So the fact that they're in this position at all, the fact that they took equity in a company in a penny stock. I mean, why? Like, fuck. If you were CR Group, and would you take equity in this company? I would, obviously, but if you didn't know about it, and most penny stocks out there, it's like, that's a really risky move to be like, yeah, in lieu of paying us back debt, just have shares, right? That's like getting shares in a startup. Like, oh, thanks. 50-50, these go to zero, right? Like, thanks for the RSUs. I would prefer a salary, but thanks. But that's what Sierra Group did. They're like, yeah, no, I'll take equity. That's a huge vote of confidence in the company, when you take equity. So that's my thoughts on CR Group. Let's keep going. Sorry to hound on you, Joseph, man. I know you're just asking a question.
Any thoughts on the chart right now from what you're seeing? You're seeing we're back above 19.
Actually, I walked away. 1921. Let's obviously on the daily it doesn't look any different, but let's look at the intraday chart. 15-minute is kind of what I like. Oh, I love this 15-minute chart. This is beautiful. Oh, hell yeah. I see this is I need to get my charger, or else I'm gonna die on you guys. And then we're gonna lose all this momentum, and we're just gonna not get it back. So I gotta charge this. Hold on. Priorities. Thanks for sticking in this with, I got awkward pauses in here where I'm forgetting shit and like hemming and hawing. It's got to be hard to listen to. A lot easier for me to just run it. If anyone's by their chart right now, pull up the 15-minute chart naked, meaning take off all your indicators, put it in a logarithmic scale. This thing is going to look amazing to you. You got a nice uptrend starting at 1493. It's in this wave formation, kind of like little flags breaking out back to back to back all the way up to 2398 pivot, right? So let's draw our Fibonacci's. 1495 or 1493 to 2398. 1493, 2398. Perfect. Oh my God. See, this is where I get like I get like excited. This stuff excites me. If you guys were to guess from pivot low 1493 to pivot high 2398, if you were to guess where we retraced to on the Fibonacci chart, what would you guess? And it's a hypothetical I know no one can answer besides LaFleur. Well, we bounced right off the 61.8 golden Fibonacci to the tick, and I will literally post this to the fucking tick on 12 o'clock Eastern Standard Time. The 15-minute chart has a low of 1837. The golden Fibonacci is sitting at 1839. So I apologize. To the, I don't even know what that is, 10,000th of a cent. That's incredible. And anyone who's listened to like all of my calls will remember me saying this. On low volume days, that is when I find that stocks or equities follow their Fibonacci's the most. Because why would a stock follow a Fibonacci? Is the market maker, are they all drawing Fibonacci's and then they're just fucking trading around it? Like, no, that's not it. But what is a plausible scenario? Well, we know that high frequency trading algorithms exist. And if there's low liquidity, it's not like a market maker wants to just sit there, right? He or she might turn on the high frequency trading algorithm for that equity and go trade something else that has much higher volume and can make him money or her money. So on today, we're having extremely low volume, and all of a sudden we just have this reversal retracement tick to the 10,000th of a cent on the golden fib. Well, that tells me that there's probably some sort of like golden Fibonacci, pivot point, written into the code of the algorithm. I'm completely speculating here. Most of you probably think I sound like a crazy conspiracist, like lunatic. Hey, man, stick around for 3 years, draw your Fibonacci's, and you're gonna not think I'm so crazy. Also, what are the chances that something bottom ticks to the 10,000th percent, or I'm sorry, to the 10,000th, cent, that it's gonna reverse? I mean, it's just the odds of that are incredibly low, right? Um, so to answer LaFleur's question is, I think that what we've seen is essentially a pivot low 1493 to a pivot high 2398. That occurred on Friday. And then Monday, Tuesday, Wednesday, Thursday has been this flat, choppy consolidation pattern that has now retraced to the golden Fibonacci of this pivot and is now trying to get back above the 50 fib, which is at 1946. And then ultimately, you could extend it to, the 38.2 is 2052, the 23.6 is 2184. I'm not concerned about that stuff. What I want to see is the pivot off of the 618, and then I want to see a break of that previous high pivot at 2398. Everything in between is noise and a waste of my time. But it's important. Like, I'm so glad he asked, hey, what's going on with the chart? Well, let's open up the, intraday and intra-week, and let's see the 15-minute chart. This is awesome. It's just the 15-minute chart is essentially a 5-day chart. That's what it is. It's like 5 days in a 15-minute candles. And it's a great way to see price action. It's a great way to see, pattern and price action over that time period. That's the beauty of trading and charting and technical analysis is you know you don't see something and then you change the time frame or the scale, and all of a sudden it's like clear as fucking day. Oh my god, that's what's happening, right? Um, and so, and I'm sure that's happened to you guys many a times when you got into a trade too early and then got stopped out and then maybe waited 30 minutes and then the pattern presented itself and you're like, oh, this was a head and shoulders playing out. Like, whoops. I thought it was a bull flag, but what it really was a head and shoulders, right? So that's like I said, this, if you were to draw like a trend line, this is why, like flags and formations, like they're okay, but like Arca was saying, is the reliability is quite low. Like if you look at back testing of traders who just trade, technical patterns like head and shoulders or bull flags, bear flags, ascending, descending wedges. I think there's like statistics on this, and I'm pretty sure that, depending on which one, it ranges from 50 to like 60%. Probably 40 to 60%, which is literally like, what is that? That's like 50-50, right? So that's why, I do draw these, formations to get people. I see bad sentiment, and I want to point out, bullish formations that I'm seeing, but I really think that Fibonacci's carry a little bit more weight than anything in the market. But even, my flag yesterday that I drew, that I said should break out today or tomorrow, well, it did. It broke down to the downside, right? It could regain that bottom trend line. Or, I could just essentially draw a new trend line from this new pivot low that I had. So I just needed a little bit more data. And people could say, well, you're moving the goalpost. And it's like, well, I mean, I guess I am, but I mean, I can't help not knowing future data, right? Um, and usually, when you are presented with that additional data, the chart actually on that second attempt is better. And that actually happened to me like a couple weeks ago when I was drawing that descending wedge, and then it broke to the downs. Or I think I drew. It was like I think it was like a symmetrical triangle formation. But really, what it was is it was like a descending wedge. It just needed a couple more days, and then it broke out again. So, that's why these technical patterns, most of the time, you just need a shit ton of time to be drawing like something perfect. And by the time you draw it perfect, it's probably already moved. But yeah, no. So I think today is a very important day that occurred. What's our volume at so far today? We're at. Oh, I gotta pull up my chart. We're at 24 million. So we've eclipsed yesterday's volume, and the daily candle formation on the chart essentially looks like a doji, right? Or a doji, like a spinning top, where essentially you have a top wick and a bottom wick, and then kind of like a equidistant body in the middle. And people really get into these things. They're like three soldiers, like three green soldiers, or like a isolated baby, and I'm like, Jesus Christ, like I don't know if there's really that much to read into these like isolated daily candle patterns, but um, what I've read at what a doji means is essentially just indecision, typically, or like a rest period. When there's been a lot of volume, just indecision of buyers and sellers. So if we look at kind of, I don't really use the MACD, but the TTM Pro does have kind of not just the dots, but it does have kind of like that MACD wave where you can kind of see where there's going to be like a bullish or a bearish crossover. On the daily chart, we're kind of sitting like we've been in this red like bottom wave, and we're not entering like a new inflection of a bottom wave. We're actually, I think, starting to get like this increased amplitude to maybe crossover. I'm like moving my hand here in a wave pattern, like you guys can see me, and I'm like probably look crazy to anyone who could see me. um, we got some new listeners in here. I'm gonna keep scrolling. LaFleur, if you got anything, feel free to get me while I'm just scrolling through these comments. R. Callie studies economics. Oh, what did you say? Human psychology is insane. Yeah, economics is fascinating. It's basically like a financial extension of psychology. Yeah, no, I agree. It's very important. Saw this on StockTwits. Sounds promising. Let's read. Oh yeah, I saw this. This person on StockTwits mentioned that Biomedica on LinkedIn, some some hospital or clinic in Macedonia, in Europe, apparently, recently bought a T2DX machine via Biomedica. I saw the picture, the screenshot of the LinkedIn picture. I haven't done source verification to confirm if that's correct or not, but it wouldn't surprise me if a random hospital in Eastern Europe or even Western Europe, has a new T2DX. They're not going to PR every time they sell a machine. It costs money for them to PR, and it makes much more sense for them to batch those those news alerts. So, everyone thinks, oh, we haven't heard anything, like we're not getting new sales, management's dicking around, jerking off, going on vacation, and they all just want to screw you. It's like, no, they're just fucking operating their day-to-day business, and that's the way things roll. Like, you don't need a PR every single day or every week or even every month. They'll PR when they see it's fit, and the reason for their timing is just, it's a known unknown. We just don't know why. Okay. So that's that. I think that that is cool. It does suggest that we are continuing, to not just focus on future biothreat, but also hone down on our current pipeline and increase um, that market share of our current T2DX and Canada and sepsis panels and everything. So that's great. Um, let's see here. Yeah, no, Joshy Invest. I hear your comments, about pumping and stuff. Yeah, I mean, everybody's got a different personality. I know, there's a lot of people that we're all kind of friendly to each other on here, and I'm glad that we all have similar attitudes and feelings towards T2 biosystems. But I do wish that we would um, maybe slow down with the like call outs for like hours of when like this thing is gonna run, like in after hours, or like 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock. I understand the excitement. I maybe you're see, but if you're calling it out, then like call out a reason why. Don't just be like, we're gonna run at 1 o'clock because shorts are fucked. Like, that's just not helpful to anybody. Be like, hey, I'm seeing a crazy amount of dark pool volume triggering right now. We're at an apex at a flag formation. The apex of the triangle ends at 1 o'clock. That's what I'm kind of seeing for maybe a breakout. But it just kind of like randomly calling out days and times just based on sentiment and like a fuck you to shorts. The problem with it is that it does like it hurts credibility for everyone involved in the stock, not just like that one person. Because then everybody gets looped into that pump of like, oh, you guys, what happened at 1 o'clock? You guys are 20% below what you were. You guys are a bunch of fucking idiots, right? And you're trying to tell me that this thing won't reverse split. Well, what about your previous three call outs that were wrong? So like I definitely understand. I definitely understand like the frustration towards this stock in that regard, because I and like we don't even need to like say names, because it's just, I've even done it. Like I've even posted like, I think that this is going to break out tomorrow based on maybe this, and I was wrong. So it's like, I need to check myself when I'm giving timelines and stuff. And that's why, if you've seen me give a timeline more recently, what I try to do is keep it pretty broad. And one, and then two, I try and back it up with not just like a chart, but then volume, and then like TTM Pro squeeze, and the number of days involved in like a 3 day candle. I try and really back it up with a lot of different reasons of why I think the price is going to get to where it is, at a certain time. But we can't unfortunately get around like not calling out time completely right now, because time is a factor here, right? Like, we need to get above $1 before, preferably like before November 6th, so that we have those 10 trading days. Um, so yeah, I thank you for that point, Joshy Invest. I think that that was and many people liked your comment there, which tells me that there's other people besides you that are thinking this way. So I think that's a really good point, and I'll try and if it's going on with people that are in like the leader group of like these host calls and stuff, I'll try and like play devil's advocate and try and push back on that a little bit as well. Um, all right, let's see here. It's 2:34. We've been going for like 2.5 hours so far. I don't want to totally exhaust you guys on stuff. I don't need to sit here and ramble about nothing just to hear my voice. Let's wrap up some things for people who maybe like tuned into this call late, and then maybe it'll spark some new comments. And if it doesn't, then we'll wrap things up. Okay. So kind of just go over, I went over the technicals. This is a weekly bullish pattern formation versus a cup and handle, and this is like the handle part. The Fibonacci 50% pivot point from 210 high to 5 cent low is sitting at $1.08, which does coincide with the breakout range of this current bullish channel, given the range of 46 cents down to 14 cents. If we were to break out, essentially it would be that same range, which would get us to $1.08. The golden fib sits at $1.32, which in the near term we would like to see bulls break that price to go along with Trendy John's, my mentor's Fibonacci training, which suggested that above the golden fib, with a big pivot, suggests a different trend change, right? We do have like a really near term short term bullish trend, but we're in a long term bearish trend. So that's kind of my recap on the technicals and the Fibonacci's. The TTM Pro Squeeze is alerting on the 3-day. And the weekly, the highest high frames on the low squeeze. It's been for multiple, I think, 2 weeks now, and then 4 3-day candles. So that's 12 trading sessions. So we are, having multiple indicators of, price confluence and increased volatility that should be coming, backed up with fundamentals of, what we expect to hear from the company for government contract news or that T2 510K resistance panel submission. We talked about the psychology of trading a little bit, the fear that's involved, the greed that's involved, how to manage those emotions with your position. We talked about dealing with uncertainty. We talked a little bit about the option chain, and how there's much more open interest for calls than there are puts. We talked about like gamma squeeze involved in an option chain. We talked about a V-shaped recovery, maybe putting this, 4 to 5 months, or I'm sorry, 4 to 5 quarters. If that V shape were to occur on that logarithmic scale, it would put it in a range of $11 to $29. Again, like these are just things that I'm seeing on the chart. I don't know if things are, I don't know if this will get to $1. I don't know if this will reverse split. We already talked about why I'm here. So I think that's a good wrap up. LaFleur, you got anything before I wrap this thing up, or even like Max or
Not necessarily.
yeah. And I'm not in a rush to leave, so like if we got more stuff, I'm happy to
I
talk.
did see somebody say something about us losing momentum as far as the EMAs. I don't know if you're seeing that as well.
Yeah, let me I'll take off the naked chart. I'll pull up my EMA chart. What I use is the real quickly. I use the 9 EMA. I use the oh man, what? Sorry, it just gave me an error on my chart. All right, let me see which EMAs I use real quick so that we are all on the same page. Edit. So I use the 9 EMA, and then I use the 14 sometimes. But on this chart, I just am using the 9 EMA, the 50 SMA, the 100 SMA, and the 200 SMA. And if I just start with the weekly chart, because I like starting with the weekly chart, We are just below, let's see here. We had a bullish crossover of price on the 9 EMA on the weekly chart back on the week of July 31st. And we had 2 weeks, 2 to 3 weeks above the, closing above the 9 EMA. And then we lost the 9 EMA September the week of September the 4th, and we have not been back above the 9 EMA on the weekly chart since September the 4th. And right now, what I've noticed historically, and I love the 9 EMA. It's just kind of what I've used the most in terms of like mean reversion trades, and standard deviations, visualizing it. How far close away a stock is trading historically to its mean, on the bell curve. So essentially, what I've noticed is that really strong moves that occur either to the upside or the downside, they really use that 9 EMA as like a launching pad. Truly. Like just on back testing on stocks, different securities, penny stocks, blue chips, on different time frames, you can just look at that 9 EMA, and on really big impulse moves, it's like it feels like 7 times out of 10 it's like coming just it's like it felt like it just ignited the stock. So what I'm seeing right now is that we actually have just been like closing above and below. We've been like chopping around the 9 EMA. There hasn't really been a convicted move to the upside or the downside coming off of the base of that 9 EMA. Okay. Like 3 weeks ago, we closed below it. Yet last week we didn't go back and test the 9 EMA, and this week we still haven't gone back and tested it. So those whenever I see that, a down move that really doesn't start from the impulse of the 9 EMA, and I'm talking like touching it and just going up from there. Not like a huge wick to the bottom and then the bottom. I'm talking like, this thing just rockets off flushly with the 9 EMA. Those are typically the moves that I'm like that I believe, that I have a little bit more conviction believing on continuation. And we just have not seen that either to the bullish or the bearish aspect. Maybe a bullish push off back August 7th, when price is at 33 and then going up to 70, which is a pretty big impulse. But since then, there's not been an impulse off the 9 EMA. So I would like to see price close above the 9 EMA on the weekly chart, before I really start thinking that this is going to gain more momentum, right? Because right now the momentum is shit. We bounced off 14. We had some nice momentum going to 23, but then we've just had 5 days of just slow bleed, back down to close that gap, kind of in that 18-cent range. So we still have, an hour and a half, a little less than an hour and a half trading today. We know that this thing does like to move, towards the end of the day or earlier in the day. So those are the periods of volatility in the stock. So there's 2 trading days. I should say 1 1/4 trading day remaining for this to maybe regain its 9 EMA on the weekly chart. Certainly enough time for this to do so, given its volatility range. Um, and I would like to see that this week. That would certainly make me feel better just on the inside. Just from like a subjective standpoint. I like when the price is above the 9 EMA. It usually indicates that, there's a short-term bullish uptrend, right? Um, it's a fast period moving average. So it usually indicates a short-term trend or a change in the trend. So then we look at the 50 period simple moving average on the weekly chart, and that's sitting at 73 cents right now, which is just below that 38.2 Fibonacci at 84 cents or 83 cents. So I could absolutely see, some people have been asking me, like, dude, is this going to go above $1 in a day or in days or weeks? Like, how's this thing going to move? Well, I don't know. but we can entertain different scenarios. So I can certainly entertain a scenario where, right, we kind of talked about how based on the 3-day chart and the TTM Pro squeeze, the timeline of us getting to like a dollar organically, we kind of called out that maybe that third trading week in October, right? We kind of called out or maybe that fourth week in October, the 24th, right? Maybe that the 20th, the 19th through the 24th region is kind of where I was anticipating that squeeze to present, the result of that TTM alert. So what I can do is I can go to the weekly chart and then we can play around with some of this. So, let's just say this week we close maybe at the 9 EMA, maybe within the body of last week's candle, around this 22 to 25 cent range, right? I can absolutely see a continuation week to the upside next week. Next week we really want to see some more bullish price action. It's not the end of the world if it's negative, but because this pattern, if it's within the consolidation, then it's just, continuing this consolidation pattern. But just with the timeline of things, I think everyone wants to see this start to go up. So I could definitely see this closing inside this week, next week, maybe having an up candle, maybe testing that 32 range, right? Maybe next week this thing actually breaks out of this bullish pattern and then tests the 50 simple moving average on the weekly chart, which is sitting at 73 cents, which is that essentially a retest of previous pivot highs, right? Um, Usually, when there's a previous pivot high, price likes to go back and retest it. And so I can absolutely see that happening from an EMA and an SMA standpoint on this chart, right? So there's some more consolidation, or I mean, confluation to suggest that, price could go maybe 25 this week, 32 next week, maybe 72 next week or the week after. And then on that fourth week, right, if we can get above this 50 period moving average on the weekly chart, because that's a big resistance level, right? Like 50 period moving average on the daily chart presented a lot of resistance. So on the weekly chart, you can certainly expect it to present resistance too. And then and actually I love oh man, I'm glad that we didn't end it because I want to bring this up. So if you guys can do me a favor, if you can actually just put on the 50 period simple moving average and the 100 period moving average, the simple moving average on the weekly time frame. Put it at whatever, just make it two different colors that way you know which one's which. Um what I want you to visualize is once you get it up or later on, you can re-listen to this recording and do it yourself, but what I want you to see is that the direction and the pattern of the EMAs are also very important. You know, not just if they're all pointed down or all pointed, like some of them are pointed down, some of them are a little bit more flat, and some of them are pointed up, right? These all tell you the direction of the moving average over these periods of time. So what I'm trying to say is that if you look at the weekly 50 moving average, the simple moving average, you see that it has like this downward slope, but over since September 18th, the slope has dramatically decreased. The downward slope, right, from math class, right? The downward slope has now flattened out, and it's not completely flat, but it's like a less than a 40, it maybe like a 30-degree angle, you know. And so that tells you that price is starting to maybe turn around here on the weekly chart. And this is just from if you guys follow Trade with Ninja or Trade Ninja, it's not Trade Ninja. The guy is like Trade with Ninja on Twitter or X or something like that. He runs a Discord. He's not my favorite. I wouldn't recommend buying his Discord. I think he's kind of shady. I would tell that to his face, but I do like one of his trading patterns. He calls out this kind of like gap on the EMA. So everyone knows about a gap on like a daily or on a just like a candle chart, right? But there's such thing that occurs on an EMA as well. And I think that what he called it was actually a vacuum and not a gap. And it's where the EMAs kind of they get to this level of spreading out so far away that you can almost visualize like the bottom one starts to round out and the top one starts to flatten out and it kind of creates this what looks like this like almost oval shape or circular shaped vacuum. And I sound crazy and I'll post the picture that way you guys can visualize and time it up and go back and see what I'm talking about because I'll kind of draw it on my chart. But what I have noticed is whenever the EMAs set up, and this is just pattern recognition from me seeing it probably hundreds of times, after actively trading every day over that year and just over the 3 years of swing trading. What I've seen is when I see the pattern of these EMAs set up like this and into almost this oval shaped vacuum pattern, typically likes to fill that vacuum. And I've seen it so many times. And right now, there is the vacuum from the 50 simple moving average to the 100 simple moving average on the weekly chart exists all the way from 73 cents all the way to $8.20. And if you remember, the Fibonacci extensions extend all the way to $8.76, right? That was that 483.6 fib extension. So that range, certainly like that vacuum of price, whether it fills in months or quarters, remember this is a weekly chart, right? So this could take several weeks. Like if what Ninja likes to do is he like takes symmetry to a whole nother level, like truly, and I kind of like this. Like his charting's kind of fun. Um, and that's kind of how you swing trade is you got to pick an expiration for like an option, right? And then count out weekly candles and then try and speculate, when you think price is going to get to your destination, right? Because time is a huge factor for option trading, and that's what he did. So, what he would do on this weekly is he would probably count the number of weekly candles, that it took price to get from a high of, $8.70, which was the last time we closed above that range was the week of August 15 in 2022. So if we were to count the candles, which we don't need to count those candles, we know that there's probably 52 candles in there at least, and then you can just add the weeklies. Well, what you can do is you can go from the bottom and then you can start counting to the right of that. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We've had 14 weeks, weekly candles since T2 has bottomed out at 5 cents. And we know that it took about 52 of those candles or a little bit less of 52 weekly candles to get from $5 down to 5 cents. So if symmetry were to play out or a V reversal, that's literally a symmetrical pattern, right, on the quarterly chart, it could take another 52 or a little bit less weekly candles to get back up to that $5 range, right? So this is like the idea of symmetry in the market. These are like mathematical, patterns that are playing out here. So um, whenever I get done talking over a big point, I'm like, okay, now what was my original point? But basically, yeah, that there's just a lot of different ways that you can. Oh, we were talking about the EMA confluation and stuff, but yeah, there's just different ways that you can try and speculate, especially when time is of the essence, like in the case for what an option expiration contract, or when a company needs to, get a reverse split by a certain time or get above a dollar by a certain time. You absolutely should try and speculate candle formations and see, if do I see a possibility of this playing out? Did it take 3 years to get from a dollar down to 5 cents, or did it take 3 months? Like because we don't have 3 years, we have like 4 weeks. And what I'm seeing is that just to get from a dollar to uh essentially 5 cents, like we're more than halfway there. You know what I'm saying? So um, I think we're well within the time period of meeting this organic timeline. People are freaking out because yeah, it's getting closer. It's October. We're 1 month away. It felt better when we were in September and could say we have all of October, but here we are. Um, but yeah, so I think what I'll do is I'll post that kind of vacuum, picture of those EMAs, and maybe I'll draw like hypothetical candles to what I think could happen, and maybe even I know I have some previous screenshots. I probably deleted it back from previous trading days when that vacuum did fill, and I could kind of like show you a proof of concept type thing. There's just to kind of add on to that concept of a price vacuum and a gap. A lot of people like say gap fills are very common, and they are. And a lot of people, I think a good way to think of it would be like is a vacuum. That unfilled liquidity acts as a vacuum. And there's this great Aristotle quote. I don't know if he actually said this or not, but if you look it up, he said it. Um, it's essentially in Latin, like nature hates vacuums, and I think it's like abhorri vacuumi or something like that. I probably butchered that, but it's this idea in physics that nature abhors a vacuum, meaning that if there's a vacuum that exists, the natural tendency in our physical world is to then fill that vacuum. And people could be like, well, why? And that's like an existential fucking physics question, you know? And that's actually a fun conversation to have, but it's not pertinent here. But if that intrigues you, and I'm not just talking hogwash, there, like Aristotle said, nature abhors a vacuum. Why did Aristotle say that? You know what I'm saying? And why is it that in charting we see gap fills on daily, weekly, hourly charts, right? Why is that vacuum filling? Well, it's this idea of unmet liquidity in the market, a vacuum that fills in a water chamber. You know what I'm saying? Like in our physical world, there's all sorts of explanations why vacuums get filled. So why would it be any different in trading or in psychology, right? This is all part of our physical world. So that's why trading is so amazing. There's so many applications since it is humans just acting out, right? It's essentially just our world condensed onto like a candle chart, which is just fascinating to me. That's why I'll always do this, even if I'm, very wealthy and I don't need to like trade. It's just so intriguing to me to see human psychology, playing out real time, and then being able to create arbitrage opportunities from that, and playing on human psychology. Let's see here. Shows September 23, right? That, yeah. Post another conference. Thank you for these audio updates. Really help the nerves. Yeah, and essentially that's kind of Weary Centurion. That's cool name by the way. That's kind of why I'm on here. It doesn't do anything for me to sit here. I do enjoy the interaction during the day with others. I enjoy talking about this stuff. So in that sense, it does something for me. But from like a material financial aspect, I'm not getting paid to get on here and talk. But I love doing it because I think that the retail needs it. And like I said, that I had that day last year, like when I was showering and price went down like 50% in after hours, and I just like had no one to talk to. I just had my girlfriend and Joe. And, Joe didn't know why we were dropping 50% on positive clinical trial news on BioThreat. You know what I'm saying? Like, nothing was making sense. And I had nobody to turn to. I couldn't get on a space call. I couldn't fucking tweet T2 what's happening and get 40 retailers like tweeting, oh, this is what's happening. Like, nobody was fucking around. So it gives me joy to be able to hear you guys and see other people saying like, hey, even if it's just one of you, like, hey, thank you for these audio calls. I'm nervous. I don't work in medicine. Um, you know, I like to invest. I like to do due diligence, but you're really filling these gaps for me. Like, That's what I'm trying to do, is to just provide some information. Honestly, man, like, not to make it like, too romantic, but like, honestly, like, fuck institutional money. Like, fuck institutional money. Hardcore. I feel like Robinhood is actually the most ironic name for a brokerage, because Robinhood historically, right, stole from the rich and gave to the poor. But what have we seen with Robinhood over the last 3 years as a broker, right? Cutting off trades, not allowing people to exit their positions, marketing yourself as free to trade, but then having payment for order flow, filling you at a shitty price, slippage. I'd rather you charge me commission and then give me a better fill, right? Let me make the decision on where I get fucked, right? It's like when Vinny said in The Big Short, "How are you gonna fuck me? I know that you're gonna do it, and I don't care, but just tell me how you're gonna fuck me," right? The transparency is valuable. So, I talk about all this stuff because, like, Roaring Kitty was the light for retail back in 2020. And I'm not calling myself Roaring Kitty. It'd be fucking cool if someone makes a movie after me, if T2 like goes to the fucking moon and like drops like 5 hedge funds underwater. That'd be fucking cool. But like, you know, uh, that was hugely valuable for. And by the way, who's co-starring with me? LaFleur. We got Raj, T2 Rough Rider, Catherine, Dub HDA with the fucking awesome Inception movie. That was pretty cool. But yeah, no. So like, like three. It's been 3 years since GameStop happened. 2 years, right? And Roaring Kitty is rich as fuck now, and he can't be bothered. And hopefully that's the point I get to as well. But now is my time, maybe, like, it's like now, or now is our time, right? Everyone involved in this, everyone's sitting here, like, we only have 34 people sitting in this, like, we're small, 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 right? We're the people that are here before everyone else, and we could be the noise, right? GameStop happened in stages, and then all of a sudden it blew up, right? And that can happen here too. It's like this thing can melt up, melt up, melt up, and then have like a pop off um over a period of a year, you know what I'm saying? So the more information that we have early on, this really strong fundamental core base where retail is like, no, 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 this is not like a shitty, short squeeze on a shitco. This is like, this has fundamental legs. This could be something here. That's going to be beneficial for, more retail down the road. You know what I'm saying? And again, not to be romantic, but it is us versus them, right? There's that like Ken Griffin quote, right? Where he's like, you wouldn't go on a basketball court, right? That Arco was talking about. You wouldn't go on a basketball court and try and like go up against Kobe or LeBron, right? Um, and you wouldn't go to stock market and come against me. And it's like, dude, fuck you. Okay. Kobe Bryant and LeBron James don't make the rules for the basketball game they play in, right? And it's like, you have all the order flow. Of course you're going to win. You see everyone's cards being played at real time. You know what I'm saying? So it is us versus them. This is a zero sum game. This is a transfer of wealth. Okay? So if I can come in here and talk to 30 retailers and provide them some insight that allows them to make a decision on something, then fuck yeah, dude. I'm going to do that all day long because nobody else is going to do it, And all we're seeing is retail lose money left and right. Inflation, we're getting fucked. Nobody can buy assets. I make a six-figure salary and I don't even want to touch a mortgage right now. Like, So I can't invest in property. The stock market indices, QQQs and SPY, are 10, 12% from all-time highs. The fuck do I want to buy an index 12% from all-time highs when I want to retire in 30 years? That does nothing for me. You know what I'm saying? So I can't really get really hard into, the indices right now. Maybe XBI. So what is there? There's like cryptocurrency, which I don't really understand. I mean, I understand Bitcoin and blockchain, but the rest of it I don't really get, and I understand the value in that. So maybe Bitcoin, but even then, we're seeing that, like we're sitting at 27,000 with Bitcoin. Does it go down to 10,000, 12,000? I don't know. But I don't know as much about that, so I'm not going to get heavy into that. So what do I know? I know medicine really good. I treated sepsis for 3 years, and I all of a sudden have this company where I understand everything. I understand all the financial. I shouldn't say everything, but 99% of the company I like pretty much get, from the financial aspect, from the fundamental technology to the medicine to the pipeline maturation timeline and their debt obligations. It's like it would be irresponsible for me to invest in anything else right now, because that's just where my edge is. But that's not like, we got engineers sitting in here, I'm sure. Like, I know there's a pilot that, jet speed, I think, is a pilot. And so he's like, he could probably, like, he could probably tell you about the balance sheets of American Airlines, or a lot better than I could. You know what I'm saying? Or I don't know if he's a commercial airliner, but this is my point. Warren Buffett talks about investing in things that right? Like, don't try and be a hero. Don't try and be as soon as you, like, look up like real activist investors, I'm talking like there are people out. You have to understand your competition is fucking insane in this market, in the markets. You think your due diligence is good, your due diligence is shit. The only reason my due diligence is so good is because I literally had to do this for a living, right? But even then, I had to spend hours, and I mean hours, over periods of days and weeks and months, learning about this company, poring over the clinical trials. Like, that's how nuanced that you have to be if you want to really invest in something. And because otherwise, how are you going to hold when things get uncertain, right? When I'm sitting in McDonald's in France, like, asking my girlfriend the fuck is going on, right? That could have been my capitulation point there. But what I had is I had a strong background in the knowledge of the company and the tech. So I was able to not just hold, but even like fucking buy more, right? So that's what, like, and anyone sitting here, if you don't get T2, even after me sitting here, just because I'm so bullish, I don't want you to follow me just because I'm so bullish. You don't know me. I think I'm a good person. I think I have integrity. And I think most people here would back that up just from their history and their interactions with me. But if you don't know anything fundamental about medicine or sepsis, or this tech, like, and you're just here because I'm bullish, you're playing with you're playing with fire, man. And you're setting yourself up to get, like, this one guy. I had to block him the other day because he literally said, I feel betrayed, is what he said. I'm like, how can you feel betrayed? Like, did you buy this because, like, you know what I'm saying? Like, if you feel betrayed, then you bought for the wrong reason. The only person who you should feel betrayed by is management, right? Like, you should not be, and even then you shouldn't really, you should feel like you hit the buy button, right? You made the decision, or you hit the sell button, you made the decision. Like, right? You got to live with your decisions. Like, nobody's responsible. Um And so that's why I even give that, like, I don't come in here and just think that I sound smart and, oh, this guy works in medicine and he makes decent money. He's been doing this for 3 years, so I'm going to listen to him. You know, it's just, are you gonna are things gonna work out for you if that happens? Probably, yeah. The problem is the next time you do it, it might not, right? So like if you're going to be active in this market, you just got to do the research yourself. Don't believe what anyone else is telling you unless you've done the research yourself, okay? I don't want anyone to lose money unnecessarily. But the good thing is, like, luckily you're in T. If you are here and you're in T2, like, I think you're in a really good spot. And even if you're here, based on kind of like maybe a bad habit of a buy, and now you want to stay in it because you think I'm bullish and stuff, then so be it. That's fine. Um, I think things are going to work out really well for you. Um, but I don't want to be, held responsible if things don't work out, and I have seen a lot of people upset at me or at others, as this thing has dropped 70%. They keep seeing me be bullish about it, but you got to understand I'm bullish long term, right? Um, and I'm even bullish short term, medium term right now. Um, so you just be careful out there. Um, there's a lot of misinformation just in the financial markets. It's not good. All right. So let's see here. Everyone is saying thank you. Oh, we got someone from France, Eric Laurent. Bonjour. Je voudrais un bonbon, s'il vous plaît. That was like the only thing I knew how to say in France is, can I have a piece of candy, please? Let's see here. LaFleur, do we have anything else? Should we wrap this up? We got a couple of new people in here.
Yeah, I mean, if you want to keep going, I'm fine with that. Yeah, for sure.
We can, honestly, I mean, we might as well, if people are hanging in here, you might as well just keep going. My girl doesn't get home until 5:30. I know the market is open for another 50 more minutes now.
Yeah, and it's crazy
Um,
how you said kind of like the market in and of itself is kind of like shit right now. So I think that's kind of like
yeah,
also a factor as well. Kind of like when institutions are kind of trying to get their positions in the or manage their positions at the end of the month and at the beginning. Like you should kind of expect something like this.
totally. And I'm glad you brought that up because, we talked about correlation in the market, XPI or SPY or whatever. To some degree, when a high frequency trading algorithm is placed, we talked about a Fibonacci, code being present in one of those algorithms, as evidenced by it bouncing on the 618 today. Suggesting that is possibly the case. We'll never know for sure unless you're fortunate enough to be a market maker and manipulate the markets. But essentially, what we're seeing extreme weakness in the broad markets, right? Like a decent amount of fear. Like let's stop talking about T2 and let's talk about more in the broad markets. I mean, I love talking about broad market action and real estate, but we can keep it in relation to T2 right now. So let's pull up the SPY.
Yeah, I've seen you've been tweeting about real estate most recently.
Yeah, no, and I'll probably like I always find it, most people probably followed me because of T2. So it's like whenever I post about other shit, I'm like, well, people probably don't give a shit about what I have to think about this. But if you're following me, my shtick on this platform is I'm like I kind of have this like affect of I got like a chip on my shoulder a little bit. Um, I don't like so like I follow a ton of business accounts, small business, large business, traders, real estate developers, real estate agents, brokers, all sorts of things because I just am fascinated in business. And I think it's true who you surround yourself, right? You become, and you can do that on Twitter, or on X. So what I try and do is I just try and follow a bunch of people who I think are smarter than me. Um, and what I've seen recently is this echo chamber of kind of like these accounts with 10,000, anyone above 10,000, all the way up to like 100, 300,000 followers. They all kind of like follow each other, mention each other, talk to each other in the comments, and A lot of them are in the real estate game, and you just it's so funny. I just like I usually, if I see a post that I feel is the wrong take, I'll quote it, and I'll usually add like some slapstick backhanded comment to it that's kind of like satire or the like. So it does come across dickish. I like to say that I come across more dickish online than I am in person. I'm actually quite nice and fun to be around. But I just like when it comes to money, if I see something that I strongly disagree, or I'm gonna call it out because it affects people. Like I saw this guy, saying that, and we can get back to spy in a second. But I saw this guy calling out, last week. I think I quoted, or maybe earlier this week. Um, it was some owner. He said, we recently sold 8 Airbnbs at a 5 to 6.3 capitalization rate. Which, if as a seller, you want to sell at a low cap rate. As a buyer, you want to buy at a high cap rate, right? Because you're buying income. The lower your cap rate is, the higher your home value. That's the way of that equation. So it goes cap rate equals net operating income over the value of the asset. So he was saying that based on his 8 exits in the last 2 years, at a 5.5 to 6.3 cap rate, he thinks that it is doable to sell a 500 plus portfolio of Airbnbs. And then he didn't give the range of the cap rate at that, but I quoted it, and I'm like, okay, so you're taking a data set of 8 assets out of 500 that you sold at a relatively low cap rate during what is arguably the peak of this last 5 to 10 year real estate asset bubble, right? Like everyone wants to talk about '08 and the crash, like, and I saw the FI couples like, oh, it's not happening again. You're not Michael Burry. It's like, well, I mean, that's just as arrogant as saying that it is going to happen. You saying that it's not going to happen is just as arrogant as me saying that it is going to happen. Like, nobody knows what's going to happen. All we can do is look at the market environment and kind of draw our speculations from there. But what I was saying to this guy is like, so you're saying that you're going to sell 500, and then he followed up and said, well, we think it's going to be between a 6.5 and an 8 cap rate. And I'm thinking to myself, okay, so you think that you're over the next 3 to 5 years you're going to be able to exit just a percentage point above, maybe 1 or 1.5 percentage points of capitalization, above what you're selling at now. That's, in my opinion, and a very humble opinion at that, because I don't have a lot of experience real estate investing. I have very little, but I have done it, and I know the numbers, I know the equations. In the context of higher interest rates that are continuing, the fact that we've only really seen, 10 to 15% corrections nationally with real estate, not even just locally, tells me that, and many other people agreed that, there's a lot of downside that hasn't occurred yet. People are saying it's because, there's no supply. That is true. There's very little supply in the housing market, but there's always been pretty low supply in the housing market. That's the way that it's designed that way. Do you not think America has enough wood to build enough houses to house everyone in America? Like, come on. We fucking have nuclear weapons. We have jets that cost like more money than most people make in 10 lifetimes. Like, we absolutely have the ability to build enough houses for enough Americans in this country. There's an intention not to do that because then you would the American dream is to buy a house, and then your house appreciates and you're able to retire based on the value of your home. Basically, it's like the idea. In the last 50 years, that's been the idea. So you can't just essentially assume that you're going to get, a similar cap rate after we just had 10 years of real estate appreciation. We haven't really seen a correction yet. I bet you there's a lot of homeowners sitting in here, and it doesn't make people feel good when I say that. So that's why, like, Spider or Spidey commented on, my buyers smell the blood, and I kind of gave that margin call gif or whatever, where he says, um, we are selling to buyers at the fair market price, and he's like, the buyers aren't in control, blah blah blah. And Spidey, I love you, listen to this, but I think your take is wrong on that completely. I you know and I gave my explanation to that. So yeah, no, I'm kind of like short term bearish on the housing market right now. I say that with bias, as I am currently renting. So it would certainly behoove me to see housing prices come down, so that I can afford a mortgage at these interest rates. Since I do not believe interest rates are going to pivot to the downside next year, which many real estate owners think that's going to happen, I think with this persistent inflation that can't happen. I think many people agree with me on this, not just with my humble opinion, but many people who are much smarter than I are forecasting the Fed to continue with these slow rate hikes. And so I just can't see, in the setting of continued rate hikes, housing to appreciate, or to even hold the sustained values that they currently have. Most people don't realize that it took from 1990s to 2019 for housing to double. And then it doubled again from 2019 to now. Think about that. It took almost 20 to 30 years for housing nationally to appreciate by 100%. And then it did it in 3 years. And people are thinking that they're going to get a 6 or an 8 cap rate on their 500 Airbnbs. Well, let's talk about the net operating income of your rental properties during a recession. Many people put statistical models based on what's happening now. Smart people might bake in some bad stuff, but humans tend to just be optimistic. So it would be completely natural if if you think that the Fed is going to drop rates next year, then you might think that there's not going to be super high unemployment. Then you might be prone to bake in pretty similar vacancy levels and net operating income on your rents. Maybe they stay the same. Maybe you can even increase them a little bit. But did you account for the possibility of continued rate hikes, at continued rate hikes higher than what you expected or faster than what you expected? And have you baked into what that does to unemployment if rates continuing going higher and higher? Companies are making less and less money. They can afford to hire less and less or keep on the staff that they hired over the last 3 years. And so there's going to be what? Layoffs. When there's layoffs, we're not just talking rent, we're talking Airbnbs. Do people go and fucking travel when they just lost their job? Fuck no, right? We're at the lowest unemployment levels that we've seen in recent history, like 50 years. Well, super high inflation, everyone's like, why isn't the market crashing, you know, of this inflation? Well, it's because we've had such strong unemployment, right? Or such little unemployment. It doesn't feel that way because we go out, you wait 20 minutes with an irritable staff member at a restaurant, but the facts are, the statistics that we're being given at least are showing that we're at historical lows for unemployment. Well, if people are employed, maybe it hurts to pay expensive rent, and maybe we don't want to do it, but you can. You have the ability to, because you have an income, right? Maybe that means you just can't do, right? People just don't, like, this is from The Big Short. People just don't, like, not pay their mortgage. Like, it's the first thing that they pay is either their rent or their mortgage, right? Because if they don't, then they're without shelter, right? So it's usually something that people can flex. Like, they get flexed on rent because, like, the landowners know, right, that they have pricing power. right? If they increase rent by, a certain margin within a reasonable range, there's a likelihood that the renter's just going to fucking eat it and not go elsewhere, right? So, but that can't happen in a recession though, where people are losing their jobs, right? They can't flex on that because they don't have the income to provide it. So what do? Right? When they lose a job, well, they can't afford those rent increases. They can't afford Airbnb stays. So the net operating income of all these rental models, short-term rentals, STR, right, versus long-term rentals, which is much more safer, but maybe not as cash flow positive, but much more stable, right? This guy selling 500 Airbnbs, like, I just want to know how'd you come up with your net operating income over the next 3 to 5 years? Like, truly, like, I wish I could just sit down and pick that guy's brain and be like, how did you account for what happens if there are, X layoffs and travel drops by this percentage and your net operating income drops by this? Because you can't command a low cap rate if your net operating income is low. They have a direct correlation. It's the numerator, right? And the other side of the equation. So a direct increase of net operating income with a constant home value, right, decreases the market cap. That's the nature of the fraction. The denominator increases, the denominator stays the same, the whole number, right? So, or wait, did I do that right? Net operating income increases, the home value stays the same. Would that be a higher cap rate? Yeah, that would be a higher cap rate. Oh, so let's see here. If we were to, let me make sure I have that NOI or cap rate equation. Yeah, that's right. Okay, so the cap rate. So if you increased net operating income and your home value were to remain constant, in that case, your cap rate would actually increase because you'd be making more income with the housing price staying the same. Okay. But we also know that, and that's actually, you know what? That's what did we say? We have seen home values kind of remain constant over the last 2 3 years, maybe like 10 15% corrections here and there, but pretty flat, right? In your local market, you could probably back me up on that. So why have we seen, well, so we've seen net operating income increase, but the home values have been kind of remaining the same, right? The net operating incomes have been kind of increasing over this period of time because renters have been increasing rent with inflation, right? So you might even, like, right now, if you like, were to just buy property based on capitalization rent, like I said, if you're buying or investing in a property and you want to cash flow it, you want to buy it at a high capitalization rate, right? Um, and then you want to force appreciation and then sell it at a lower cap rate. Okay. So right now, you have this weird kind of environment where you've had kind of increased net operating income, but it's kind of artificial, right? Because there's been pricing power with landlords being able to increase rent with inflation. So that numerator is going up. The denominator is kind of staying flat, maybe dropping a little bit. So you're getting actually increased cap rates. Okay. You're getting increased cap rates, right? Because your net operating income's increasing, your home value is kind of staying flat, so your cap rates, kind of increasing. Well, I mean, if your home value, it didn't drop too much and you just made a bunch more money on the net operating income, would you want to sell that asset? Not necessarily. You're just making more money. Your home value hasn't really changed, appreciated, or dropped. You're just sitting on more cash flow every month. There's really no incentive to sell that property, right? So that's kind of where we're sitting right now. Is investors who've bought over the last 3 years, they've seen their cap rate increase. So why would you sell that property, right? Like, you have more cash flows. So the 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 problem with, I think, home values right now is that equation changes completely, for investors, if that denominator, if the home value drops with interest rates, right? Like if you have a 30% correction in the home value and your net operating income remains the same, right? What happens to so let's see, like net operating income stays the same. So you have one, divided by 0.2 is 5. Yeah, so you would essentially in that scenario have a higher. So we don't need to go through all these different scenarios. We're going down a rabbit hole here. Essentially, the point that I'm trying to make is that I think home prices haven't really adjusted to interest rates currently. Maybe little corrections locally here and there, but I think net operating income is going to get slammed over the next couple of years, and then exiting something with a lower net operating income, you just don't have the price power. You can't command, because what you know if your net operating income decreases, most cap rates are like set in stone. Like cap rates are pretty local. Like you can, like, I go to Akron right now, and most of the real estate in Akron, Ohio is selling at like a 8 to even 15% cap rate. If you were to go to like Hollywood Hills in LA, the cap rates on those are like 1 to 2 to 3%. 3% is probably high. Like the cap rate's incredibly small on those. Okay. And so what you can do is investors, they look up by the region and they see, what do properties sell for in this region? What's like the range of the capitalization rate? So what I'm trying to say is the the cap rate is kind of already decided in the equation. And really, the things that change the most are the net operating income and the home value, right? Because if you just have an asset class in Akron, Ohio, like you just have like a C asset class in Akron, Ohio, it's not going to appreciate that much. You can only force so much appreciation there. And therefore, the capitalization rate on that, like you're never going to get a one cap rate in Akron, Ohio, right? Like no one's going to spend $1 million to get back what's 1% of that, right? In Akron, Ohio. They might do that in LA because the property class out there is type A. So I'm just trying to say that, capitalization rate is typically, pretty, it doesn't move too much. And when you're selling your property, everyone wants a low cap rate, but you're kind of locked into your area, your asset class. And then what you really have to do is just, if your net operating income command, is super high, then yeah, you can maybe have a higher cap rate, but I don't see net operating income increasing over the next 3 years, comparatively over the last three at least. But let's move on. I mean, the real estate, everyone has their opinion. Everyone, like, wants to be Michael Burry. I'm not even trying to say I understand real estate extremely well. I just, from a very fundamental like perspective, you know, when something doubles over 30 years and then doubles again over 3 years, we talk about the 9 EMA, right? We talk about standard deviation, bell curve. Real estate, in terms of valuations, are multiple standard deviations away from their historical mean right now, right? So some guy like made a smart ass comment like, you're treating real estate like the stock market. You can't. And it's like, well, no, you can't buy and sell real estate like the stock market. Well, actually, you can. You can literally buy and sell REITs, which are derivatives of real estate. And you even collect the fucking income through dividends on that. So that's not even true. You can actually treat it. But why can't you treat the stock market or the real estate market like the stock market? Do they not both involve humans interacting with each other, transacting with each other based on emotions, greed, and fear, affected by political environment, interest rate changes? Like they're very similar. So, I think it is fair to look at the real estate and look at the standard deviation away from its historical mean and just be like, Well, we're sitting 3 standard deviation away from historical mean. Just statistics tell you this is going to revert to its mean. Okay. And that just means like real estate's going to drop. You can literally, like, it could just be as simple as that. What the concept of like what comes up must come down is true. Like gravity and physics is a thing. Um, so the S&P 500 right now, I mean, just it closed on September the 14th at 450. Which was, what was the top? 479.98. I mean, so it just closed 450 on September the 14th, and we're sitting here at 424. I mean, what is that? What's that drop? Like, what's 450 all the way down to 420? It's a 30 point divided by 450. That's a 7 point drop in an index in 2 weeks. Like, whoa, right? That's a huge move. Huge move. And what have we seen over the in how in the price action of T2 in the last 2 weeks? Seen huge sell off, right? A lot more than 7%, right? But S&P 500 is a collection of the top 500 companies in America, and that's dropping 7% in 2 weeks. You bet your ass a micro cap penny stock, can drop much further. Even on low volume, right? Um, the high frequency trading algorithms are matching the selling pressure of the indices. Why not? And can I wanted to point this out last time. I'm glad I remember this real quick, LaFleur. But if you can pull up your chart, I'm going to pull back up the TTOO chart on the 4-hour chart. I want everyone to do this too, because this is insidious. This is crazy. So go back to where price on. Okay, let me pull up the date. So it would have been on September like the 15th, when price went from 27 all the way up to 40, 46. I think it was like that Monday right before T2 BioThreat announced. I want you to go to the 4-hour chart. I want you to look at the volume only. Well, in relation to the chart, okay? Check this shit out. Wednesday, 9 a.m., 4-hour candle, volume, 42 million. Thursday, 9 a.m., 4-hour candle, volume, 42 million. Friday, 9 a.m. candle, 9 a.m. 4-hour candle, volume, 44 million. Monday, 9 a.m. 4-hour candle, volume, 42 million. There was 1, 2, 3, 4 days in a row where the 4-hour candle had within the same million of a range, 42 million for 4 days straight during the same time period. Well, we know CRG didn't sell off 42 million of their shares for 4 days in a row. So who the fuck was that? It's not like retail, the exact retail showed up every single morning, Tuesday through Monday, trading the exact same volume. That's ludicrous. So that is something that I noticed. That was continued 42 million sell volume on the 9 o'clock Eastern Standard Time 4-hour candle. You can look back at it. It's weird. I don't know what to make of it. The only thing that the reason why I bring it up is it's just more evidence of like that's not natural. That's not naturally occurring, right? Like it's not natural for something to trade the same exact volume at the same period for 4 days in a row. It would make sense if there was a single seller, right? If that was just all CRG and they were just like block trading their shares every morning, that would make complete sense. But that's not what happened, right? Stock price dropped 70% just with CRG selling like block trades of, 2 to 8 million shares. Like fucking bullshit, right? That tells me that either the market maker or hedge fund short was taking advantage of CRG's selling and hopping on that price action. Like who's selling 42 million back to back to back to back, right? It tells me it's a single person, which tells me it's likely a market maker, right? Or a hedge fund. So I thought that was really interesting. We're also getting a high squeeze alert on the 4-hour time frame. I don't know if that was a squeeze to the downside that already occurred from like 2022 down to like 18. But we'll see that play out. We're also starting to see a vacuum fill or a vacuum on the 50-100.
Yeah, you do see kind of like these buying blocks though, almost, especially like in the morning and
Well,
after
that's the
hours as
thing
well.
is, yeah, if you're looking at the higher time frames, you can't really tell, but if you drop down to like 1 minute time frames intraday or even the 5 minute, you 100% will see, especially because what it looks like is it looks like high volume, like, kind of like to the downside. But what it is actually kind of low volume, steep to the downside, and then there's like high volume just at the bottom, and then it reverses. So it tells me that I literally think that these are just like I think that this is just the market maker short selling and getting retail to exchange their shares into institutional demand. I really do. I think that's what's happening when you're seeing like these short, similar volume, very steep sell-offs, and then followed by an intraday little reversal. You know what I'm saying? So even today, let's look at the
Yeah, today, like this morning, you will see kind of like around, I don't know, probably like 9:30, 9:35 Eastern time. It was like a 1.3 million kind of like
yeah.
buy in that area. And then price didn't move at all though, which is kind of crazy.
Yeah, no, I see that. It's a 1 minute candle, 1.14 million shares traded. Price, went from 1990, or it went, opened at 1965, high of 20, low of 1965, closed at 1994. Yeah, it didn't even move. And usually, I don't think dark pools happen right at market open. Usually, those big candles are, I don't know if they're like, at market open buy candles, like buy at market open, like market orders at, market open. But
That's only if they're
I
lit.
think, what's that? Oh, yeah, lit pool, right. But yeah, no, I agree. I'm seeing that too, LaFleur. I'm seeing particularly blocks of 1.5 to 3 million shares being traded in these 1 minute candles. And that makes total sense, right? That's total institutional volume. I mean,
Yeah, because it's
that's
definitely
not
not
retail.
retail. Because
That's not
I
retail,
don't think
you know?
anybody is kind of like buying at that volume right now, especially
No,
with
and
this kind
and
of like price
even
action
So,
with
as an example, the last time I checked the charts, there was 24 million total volume, 11 million in block trades, which tells me a lot of
oh,
that
nice.
were disguised as was
Yep.
iceberg orders, which where they split them up so you can't really tell. And
Yep.
then that's not to count any block trades that they decided to furlough from being lit at this time. So there's a lot of investment house adjustments going on during exactly what you call it, the consolidation period. But it's kind of interesting. It's been trailing at about half, just under half the volume of total volume on the block trade side all morning today.
Yep. I think that those block trades are institutional buys. Um, I don't think they would be institutional sells down here. Just in context to price action, but I honestly think this 3 month consolidation flag is just institutional demand. You know, maybe they distributed shares up at 70 and then have been accumulating at, every anywhere from 30 to 20. You know what I'm saying? And It's 3 months of consolidating. That is so long. It's an entire quarter. You know what I'm saying? And even prior to that, right? Like we had we shot up from 5 cents up to 9 cents, and then we consolidated from 9 cents back down to 7 cents over an entire month. And then price went from, you know, 7 cents to 18 cents, and then consolidated for another, 3 weeks. And then we went from 17 to 41. The bigger the move, the more consolidating that needs to occur afterwards, right? It's just the market getting into their position. Buyers and sellers. It's essentially equilibrium, right? It's becoming equilibrium, and then there needs to be an imbalance again. Whenever there's flat trading, it's just equal.
And that's kind of like another thing I'm kind of interested to see when earnings kind of comes out a little after, as far as like institutionally, who is holding this stock and who's kind of like accumulated shares over this time period.
Definitely. Definitely, yeah. These motherfuckers need to be. I I understand the concept of delayed reporting, but to avoid front running and stuff. But yeah, it's just kind of bullshit that it's like 90 days later, however many days later, you figure out who the fuck's in these things, and you're left to operate in the dark in the meantime. I agree. I think when again, uncertainty, right? We don't know who's in this. We don't know when the reverse split. Once we start to, see some more profitability on earnings, see who's invested, see who's gone, see where CRG sits, see if this thing gets past reverse split. The more and more uncertainty that is essentially taken out of the stock, the more this thing can just continue to run. Right? There is a huge, 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 the biggest uncertainty that could literally hang over a stock besides bankruptcy, in my opinion, is the possibility of a reverse split dilution. Because it's the only other thing that can really destroy shareholder equity, to the point of like bankruptcy, right? Um, and the fact that that's very, possible here, given the timeline, like that, of course, not every institution or retailer wants to get in this, but again, it's like whenever you see such long consolidation periods, the breakout from that has to be explosive, right? What it's showing you is basically, we didn't know what the fuck was going on for the last 3 months, but now we know what's going on, and we know what's going on for sure. So we're fucking moving, and we're moving to the next liquidity level, and then we can chop around again based on the next uncertainty, right? That's just it's the market can't just go straight up and straight down. Like, it's got to go up, it's got to consolidate, it's got to wait for news, like this is an active time. It's really cool to it sucks going through it, but looking back, you're like, oh yeah, okay, this looks right. If we were to fast forward half a year from now or a year from now, we could easily call this stuff out and run a clinic on TA, right? And be like, oh yeah, it was consolidating from July to September because in October, in the third week, T2 came out with biothreat government contract news, and then it got above $1, and it consolidated even more because the investors knew that they weren't going to be diluted or reverse split, and then it broke out to the next liquidity level at 210, et cetera, et cetera, et cetera. Like this, this could be kind of the storyline of this stock. So, Jim, you're in here, brother. How are you? I'm gonna invite you up here to speak if you feel like it. I got called out for by someone yesterday for my emotionality when we were talking about the reverse split. I thought that was kind of funny, but anyway. I love the banter. I love discourse. It's good. Did we miss any comments since we've been talking at all? I feel like the value of my space has kind of gone down tremendously in the last 30 minutes. Sorry about that. Um, but that's kind of what happens when we're like 3 hours into this, and I'm just kind of picking around for content. But That's, unfortunately, when I don't have like a template for topics, we kind of bounce around like this, and LaFleur does a really good job of usually bringing up new stuff. But I think, at this point, we're wrapping up the day. Let's see where price action is right now, real quick. We're sitting at 1909, yeah, and it looks like we're kind of. I'm seeing a medium squeeze on the TTM Pro on the 1 minute chart, and kind of like a flagging pattern almost. I think this 15-minute flag pattern over the last 5 days is gonna probably break out. It looks like tomorrow. Um, so I would imagine some breakout tomorrow to the. I think to the upside. Oh yeah, here comes another high squeeze alert on the 15 time frame. This will be interesting. Yeah, so the 15 time frame just posted a high squeeze alert, two of them, and we just came off of a rounded like bottom MACD almost. So I think that this is actually gonna maybe maybe squeeze a little bit into the close here. And when I say squeeze it, maybe like get up to 20 cents or nothing crazy. Um, but we'll see. But yeah, just yeah. What's up, LaFleur?
Yeah, I was going to ask if there were like kind of any stocks that you were kind of like eyeing for next, um, coming up, as far as anything that you're seeing on your financial journey and whatnot.
Oh yeah, just other equities in the market.
Yeah, because I'm at that point where
Yeah.
I'm kind of done putting liquidity and capital in the T2, so I'm kind of satisfied
Oh
with my position, and I'm good with my wins or my losses. So I'm just trying to see like if
yeah.
there was any other
You know
opportunities. Go
what?
ahead.
No, no, no. You know what, bro? It's funny you say that. So I, from just the fundamental aspect, like I calculate like for me every dollar that goes into T2, I'm like, I think this is the most return that I'll see anywhere else in the market. So I have a hard time even looking elsewhere right now. Just in terms of like, I really don't know if there's anything that I know of that can provide the outstanding return on this. But what I will say, LaFleur, is that what I want to do is, I when I can maybe sell some volatility on news, I would love to collect some premium, and then I would love to get back to swing trading options. I really would, and then maybe using that income to continue dollar cost averaging, maybe T2. But um, like I said, I buy this thing every month. I try and buy, on the last week or the first week of the month. Um, for my 401k, I just bought 1,300 more shares in my 401k. I think it was yesterday or the day before. And so I just like, I had that post, where I think this company, the valuation could be, and I talked about other asset classes and real estate and micro caps. And I think, if you are going to look at anything else in the market, I think it should probably be in the biotech or micro cap, kind of area. Just because, like I said, XBI index has been trading flat for like 10 years. Looks like it needs to maybe have a little bit of a small correction and then a breakout to the upside in the next 2 to 3 years. So what I would do is, if you are interested in like, diversifying risk, or trying to find, another unicorn company, then do some due diligence in your own wheelhouse of knowledge. See what the core holdings are in XBI. See if you can find any companies there. But honestly, like I said, this is probably, the only investments that I'll make in my short term are, what I would like to do is I would like to take some profits from T2, either from shares or from covered calls, and I would like to open up a not start a new one, but buy or acquire a already operating small business and then force appreciation onto that. I think that's probably, I think small business force appreciation is one of the better risk returns in asset classes right now. I think micro caps are really good, undervalued assets right now in the broad market. Probably like foreign stocks, like I think like Alibaba and Baidu and all the tech stocks in China have been trading. I think Alibaba has like 20 times its revenue at IPO and is trading at the same price right now. I do struggle with like China stocks because of the nationalization of their companies. The Chinese government is the Chinese Communist Party is highly involved in, like, Jack Ma just disappeared for like days. I don't know if anyone remembered that. Like, it was fucking crazy. Like, that'd be like Jeff Bezos just like disappearing by the White House. Like, that's unheard of, right? Who the fuck would invest in a company where that can just happen? Like, I really don't know. You know, after I watched like China Hustle on it was maybe Amazon Prime. I really had a hard time investing or even looking into any Chinese equity. Even if the balance sheet and everything tells me it's undervalued, I just have no way of verifying that information because their government is known to be fraudulent, right? So yeah, and I wish I had some more like, examples of micro cap ticker symbols that you can like look at if you're getting bored with T2 and you want to do some active trading with like discretional money, and like you just don't want to look at T2 bleed every single day and want some dopamine in your system. I think Hodor is, I keep saying his name, but I really do believe that he's one of the better active traders that presents some edge in the market right now. A lot of traders, they're known for like trading like Tesla and SPY or SPX or futures. Um, you know, or maybe weird penny stocks. But this guy actually has like a really interesting kind of niche um, knowledge on the biotech market. Like I have never even. I'm just scrolling through his page right now, and let's just so like GLTO, um, CHRSMSGE, like TCRX, ABOS. I mean, like these are all ticker symbols that I've literally never heard of in my entire life, and they're mostly in the biotech realm. The cool thing about biotech, and I've said this over and over again, I'll keep saying it, and it's the reason why, in the market, just I'm in medicine, but even if I wasn't, I would probably tend to the biotech because it's the only place in the market really in terms of like stock equities where there's like kind of like a binary outcome, right? Like Mullen might have a good idea and might have some proprietary like battery, technology. Like I really don't know. But their outcome's not really binary. Like there's so many different variables that can happen that that can affect their stock. But a company that is developing a drug or a diagnostic device that can capture market immediately upon approval, right? If it's superior than other things in the market backed by testing and clinical trials, this is like a binary outcome, right? This is it going to be FDA cleared or approved, or is it not? Is it going to capture this market? Is it not? Right? And to some degree, all companies are binary in that sense. Like, are they going to capture their market share or not? But what biotech does is it makes it so binary because of the moat, right? A biotech company, very few companies can trade at like 10 to 50 million dollar valuations and then overnight be valued at 100, 500, $1 billion valuations just based on something as simple as an FDA approval. But this is the power of the FDA, right? Because it acts as a gatekeeper to markets in medicine in this entire huge industry in America, right? It's actually, besides banking, I think healthcare is the largest industry in America, um, or the second largest. So, the FDA holds the gate to that, right? If you can certainly trade around that, like you can do research. Um, if you have insight into a particular, market space, like I had this insight into sepsis, so I chose to find. Oh my God, my cousin's in here. What's up, Ashley? Um, I chose to find a company that I knew what the fuck I was talking about, like sepsis, right? Like I didn't go off and try and find some oncology, preclinical trial drug pharmaceutical company, because that's just like not that's it's not my wheelhouse. I can certainly learn that stuff if I wanted to, but I have a much more natural history for sepsis, so I got very lucky that there was a company that specialized in those things. So what you could do is you go to like Hodor's account, and you can look at these different companies and look up what they do, and if it intrigues you or if it falls in your knowledge space, then you can um, you can do some technical analysis and mess around with those companies. So yeah. Anyway, that's kind of my thoughts on other asset classes, other micro cap stocks in the market that you can look at. I don't have any in particular that I would say FEMY is an interesting ticker to look at. And some of these other tickers that have gone parabolic, I love looking at those just to compare, price action to see what T2 might be able to do in the future. Just to have some fun. And we're seeing a ton of volume coming in at the end of the day here, right? 250,000, 300,000, 500,000. 30 seconds to market close, and yeah, we're squeezing up. We're breaking out of this 1930 range. I could see this going all the way up to 20 cents, potentially here before close or in the after hours, but we'll see what happens. My girlfriend she did text me, so I'm gonna go ahead and probably hop off here. Market closes in 30 seconds. I think that we've done a really good job going over everything, and I'm off this weekend. And my girlfriend's traveling, so I plan on maybe holding another one of these just to keep myself busy. So if you have any questions that were not answered today, just comment, and we'll talk about it next time. And it looks like before we hop off, there was 2 block trades of 94,903 traded at the bell. So maybe some dark pool, really small. That's smaller than my position. So all right, guys, I love y'all. You're the best, and we'll talk to you soon. Have a safe couple of days, and we'll maybe talk this weekend. Later.